The Fed had articulated a bit of a focus on growth. We know that they're not there yet.
The Fed is focusing on inflation. Inflation is still rising.
They want to create some slack in the economy without causing a recession.
The view here is that the Fed actually will remain aggressive in trying to curb inflation and, as a result, increase recession risk.
I think they want to be really cautious about pivoting too soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Futures positive 0.4% on the S&P. TK, Fed officials lining up to push back.
I'm going to let you keep the scorecard and let me know. I was watching the Major League Baseball trading. That was more interesting, but you know, there it is, and the markets move. The markets move one way, the markets move the other way. More Fed. Are we back to forward guidance? Maybe we're back to backward guidance. I'll let you decide.
The two-year yield, Tom, a coiled spring going into that Fed speak yesterday. Up 18 basis points. I have to tell you, TK, it was
Look at the 5-year.
Mary Daly of the San Francisco Fed that unleashed things, saying we're nowhere near being done. So yields up a great amount. Equities down by not much, Tom. Down about 0.1%, 0.2% lower on the NASDAQ yesterday.
Julian Emanuel moments ago publishing at Evercore ISI, and he says, look, service sector has resilient consumption, and maybe you see that within equities holding on here, and a certain kind of equities. We've got Sam Stovall later this morning.
Bramo wasn't watching the baseball. Neither was I. Lisa, I know you were looking at the data. Job openings in America coming in, and aggressively so.
How much does this actually mean, though, that you're starting to see a real weakening in the labor market versus all those false advertisements for jobs basically being taken off the market because a lot of companies are ratcheting back their hiring plans? What I'm basically getting at here is how do you read data that is soft, that is not necessarily so clear, that isn't exactly the hard data that we get in the jobs report that we'll get on Friday?
A bit more data later this morning. Lisa, the academic debate of the moment on the economic data. Can we bring job openings down without pushing unemployment higher? A lot of division out there on that topic at the moment.
You know, there is this perfect reality that people are looking for. There is some mystery behind why the participation rate in the labor market has not ticked up, why we aren't seeing more people come back and say, okay, we need to actually work now. And that, I think, people are hoping will resolve itself and get us back to some sort of equilibrium at a time where that's not happening quickly enough to get inflation back down.
Anything else to say on the baseball, Tom, before I hit these markets?
It's fun. It's fun. You know,
you had a good time.
And frankly, I think the Premier League does just as good a job. I mean, you know, you keep up with that way more than I do, but it's fun. And the Padres,
I love you, Tom.
The Padres look good.
2/3 of the show prepared for today. Yeah, that's good, Tom. Futures positive, 0.4% on the S&P, on the Nasdaq 100, up around 0.4% as well. Equities
Josh
doing
Hader
okay.
came out on the mound, and it was
good to know, Tom.
Goosebumps.
Good to know. Yields up about a basis point on a 10-year, 275.92. On a 10-year yield. A real turnaround, Lisa, in the last 24 hours.
It's really been shocking to me because everyone knew that the Fed would come out and push back on the huge rally that we saw in stocks and basically say that the bond yields were not responding to something that the Fed was actually going to do, which is back away from rate hiking. And yet here we are. I can rant about that through the rest of the show. I'll spare everybody. Today, here's what we're looking at. Yes, there is a slew of Fed speak, and we'll be tracking it throughout the day. But when it comes to the hard data, OPEC Plus is expected to agree on a modest output hike at today's meeting. How much do you get some sense that they are going to increase output in response to the trip that President Biden took to Saudi Arabia? How much do they respond to a softening in demand because of how much activity is declining? Do we get some sense of that push-pull and the latest read on the economic outlook from the big oil producers? At 10 a.m., this is going to be interesting because we actually have seen softening in the services industries. We get the U.S. ISM Services Index for the month of July. How much does it continue to decline at a time we were supposed to see a shift from goods to services? We've seen a shift away from goods, but we've also seen services start to really bleed lower. And then the next read on that we're going to get today is a slew of earnings. We've already had about 80% of S&P companies reporting earnings. The latest will be Under Armour, MGM Resorts, and Host Hotels and Resorts. I'm curious about some of these discretionary spending companies, because how much does it show people are seeing prices go up for the basic staples of life? They are pulling back from the other less basic items in life. And how much do you start to see that in the anecdotal data as well as the more collective ones, John?
I was going through some earnings calls data from Bank of America yesterday afternoon. That's what I was doing. Tom was doing something else. And the word weakness came up repeatedly for consumer discretionary. But Lisa, when you look at the stock price performance, consumer discretionary on the S&P 500 is up more than 20% from the lows of the middle of June.
People are moving on from the weakness now and looking at the beginning of the next cycle. And they're saying the consumer discretionary is the place to be if we are seeing the bottom, if we are seeing the downturn now. That's the real question. How much more weakness is there to go? And do we get a sense with some projections from some of these consumer discretionary companies?
What a squeeze in that part of the equity market. What a squeeze higher in yields yesterday as well off the back of the Fed speak. As Lisa pointed out, more Fed speak to come through today. Jens Nordvik joins us now, the founder and CEO of Exante Data. Jens, let's start there. A coiled spring, 2-year yields going into Fed speak yesterday. What did you make of that pushback from Fed speakers across the country?
I think they essentially just reiterated the message they've been trying to send over the last month or two. And the reason why we had such a violent move was that we had a very dramatic rally in fixed income over the last few weeks. And it was a reversal, if you will. I think that the big issue we have in the market is that the Fed is not about to pivot. And it's the same issue we have for many central banks around the world, right? Inflation is so high that it's just too early for central banks to come out and explicitly signal something new. But at the same time, the growth data we're getting is soft, right? So the market is kind of looking through what the Fed and other central banks are saying right now and saying, okay, they will have to pivot. So it's kind of this tension between what they're actually saying and the market trying to think just one step ahead of that, or two.
Jens, I got like 14 questions. Let me devolve it down to what OECD just said. They just handed us double-digit developed world inflation, where it's out at 10.3%, announced moments ago, up from 9.7% and 9.2% and 8.8%. You get the theme here in the recent months. We've got this global inflation. What is the dollar dynamic if we're ever so lucky as to get U.S. inflation from a 9% down to a 7%? Does dollar move?
Yes, I think what we've seen over the last 2-3 weeks is that we have this incredible tension between the weak growth I mentioned a second ago and then the fact that the long end of the U.S. yield curve is reset lower, right? So the dollar has kind of been stuck between those two things.
Yeah.
And I think from a medium-term perspective, you will often find that the big cycles in the dollar are really determined by the global growth cycle than anything else, right? So it's sort of hard to see if we don't have any green shoots in the global economy, it's hard to see the dollar really weakening dramatically. But we can have for a couple of weeks a big reset in the yield curve, and that tactically moves the dollar around. And that's exactly what we've seen over the last couple of weeks.
Jens, yesterday we were talking all day about Nancy Pelosi visiting Taiwan. Is this going to be a game changer, not just for geopolitics, but for markets? And we saw a big reaction the first part of the day in yields going lower. Then the job opening from the Fed sent it the other way. Is this going to be a lasting story for markets, or is this going to be a blip on the road to whatever's going to happen with the economy and Fed speak?
Yeah, I think the big issue that I speak to about with Exante Data clients and everybody who's involved in the market is really, okay, exactly where is inflation going to land, right? And I think in coming months, we're going to have a situation where goods prices are going to come down. We all know that gasoline prices are down in the U.S. That's going to impact headline numbers. We can actually see it around the world that the July inflation readings that we're getting are a little bit different. But that's not enough for the Fed. The Fed needs to see that on a broad basis, there's something new going on with inflation, i.e. lower, meaning services prices. So it's going to take some time before we can have conviction that there's something really different going on. And I think it's going to be a really, really difficult period for the Fed where they're going to judge, okay, headline is coming down a bit, but services prices are still very sticky. How do they handle that? That's why the market is trading so erratically right now.
Jens, just quickly, favorite trade right now, what is it?
Well, so you need to be very, very careful with your entry points, but I do think there's some rate markets where even if we had some retracement yesterday, there's a too quick a pivot price. So for example, in European rates, we think even if growth in Europe is weak, there's going to be a need for the ECB to do meaningful steps to get off negative and get into positive. And that's been priced out too much.
Interesting. Jens Nordvik there of Exante Data. Thank you, sir. TK, I have to say, we've talked about this a few times over the last week. The debate around ECB rates, very one-sided, not divided like the debate around Fed rates. There's just a complete lack of belief about how far they can go, and Jens seems to be pushing back against that just a little bit.
And where are we on Bank of England, which I believe is it tomorrow, John? Am I right on that?
Tomorrow morning.
I can't convey enough how these are three different dialogues, forgetting about Japan for a moment, and Bank of England with the inflation story there and the politics, John, that I can barely keep up with, trust Sunak. I mean, what is the bank? Does the Bank of England step back in honor of the politics, John?
And no, they have to step in honor of the data. And right now, that requires another rate hike. According to many people, it could be 50 basis points. Tom, I'm looking ahead to next week. CPI out of America, 8.8%.
Yeah, that's a key data.
Is the year-over-year figure people are looking for. That's the median estimate, a step down from 9.1. Core to stay elevated. Month-over-month changes to inflation is something President Mester mentioned yesterday, Tom.
Yes.
That's going to be the focus for this market.
We got to stop here, John. This is really important. As you mentioned, core on August 10th, folks, actually models up. And as Dr. Mester mentioned yesterday, John, Dallas trimmed 1 month data was nothing short of stunning. Liz Ann Saunders featured that yesterday, and she's dead on. I'm sorry, the inflation metric on a 30-day basis is up.
Elisa, that's what this market's going to be focused on next week.
It's not going to give people comfort, and perhaps that will cause doubling down on the trade that we saw in the second half of yesterday, where people realize the Fed cannot take their foot off the brakes that quickly, and that seems to be the move. Although you pointed this out this morning, John, we saw the move in bonds. We didn't see it in stocks.
Resilience is the word of the moment, isn't it? We're throwing a lot of this equity market and pretty resilient. Up again today by 0.4%. We'll get the view of Kristen Bidley of Citi coming up in about 50 minutes' time. And we can confirm Speaker Pelosi has taken off from Taiwan.
Yeah, I got it, John. She's here. She just passed incoming from San Francisco. She's heading due east. I'm watching it on Flight Radar.
Very cool. We'll catch up with AMH down in DC next. Tom's got two screens, Lisa. Baseball on the one side and Flight Radar on the other.
No, the Padres are killing it. I mean, they got to do the Rockies again. They took 2 yesterday, and then it's on to the Dodgers. Padres, Dodgers in honor of Vince Scully is going to be great.
Very cool. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. House Speaker Nancy Pelosi pledged that the U.S. will not abandon Taiwan. She reaffirmed American support for the democratically elected government in Taipei, despite new threats of Chinese military action. Pelosi met with Taiwan's leader and left today for South Korea. Meanwhile, China announced military drills to protest Pelosi's visit. It also halted some trade with Taiwan. The Federal Reserve is pushing back against the idea that policymakers may pivot away from tightening. 4 Fed district bank presidents highlighted in remarks on Tuesday that there's no sign that inflation is easing, and that helped trigger a surge in Treasury yields. Voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy, and voter turnout was high. 4 other states will hold similar votes in November. In the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as the next Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It is a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labor market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
Today, our delegation, which I'm very proud, came to Taiwan to make unequivocally clear we will not abandon our commitment to Taiwan, and we are proud of our enduring friendship.
Speaker Pelosi just yesterday taking off from Taiwan earlier on this morning, about an hour ago. She's heading to Seoul now from New York City this morning. Good morning with Tom Keene, Lisa Abramowicz and Jonathan Ferro. Futures positive, just about at 0.4% on the S&P. On the Nasdaq 100, we're positive 0.33%. Yields higher, much higher in yesterday's session, up another basis point this morning to 276.65, 276.47, dancing around on a US 10-year. Here's the latest tweet from Richard Haas of the Council on Foreign Relations. This one, Tom, got my attention. The reason Speaker Pelosi's Taiwan visit is getting attention is because of China's reaction. He goes on to say, if the mainland prioritised relations with the US, it would have downplayed the visit, saying it expected the US to live up to the one China policy. This crisis, in inverted commas, is about mainland politics.
Well, he took that from you yesterday, John. I think you were really out front on that yesterday, that the dynamic of America is pretty much the same as it's always been. We'll do nuance that with Anne-Marie. But, John, you were dead on yesterday about this is simply a changed China.
They're saying the same thing, Tom. A changed China under this leader, and ultimately a changed economy in a big way over the last couple of years.
You know, with Taiwan, with 30% of Taiwan exports to the mainland, and of course we saw some kind of sand yesterday was cut off by the Chinese. Anne-Marie Horton joins us now for a brief, our Bloomberg Washington correspondent. Anne-Marie, Speaker Pelosi is north of Ishigaki, which is Trenchant in World War II history, on the way to Japan, on the way, I believe, to Seoul right now. And it brings forward the proposed meeting of the Chinese and American leaders. Was that blown up yesterday, or are we still going to see a meeting? Do you have any reporting on that?
Nothing has changed so far. What we do know is that taking away from that call Xi Jinping had with President Biden is that they tasked their teams to set up an in-person meeting. We should note that during that call, there was already a lot of talk and speculation, and everyone pretty much assumed Speaker Pelosi was going to make this trip to Taiwan. So Xi Jinping was already pretty much well aware that the Speaker of the House would be going to Taiwan when he directed his teams to also start setting up that in-person meeting. And I believe that at this moment they are still working to do that, and likely that would potentially come in November, because the president will be in Asia. He'll be in Bali for the G20 meeting, and that could potentially be the first time the two meet in person with Biden as president, because of course they've met in the past.
There was respectful silence yesterday, maybe given dangers or worries of Speaker Pelosi's safety. And as she leaves Taiwanese airspace, out come the knives, out comes the criticism. Give us a distinction that this was not bipartisan. The Post has a fabulous photograph, folks, of Speaker Pelosi 30, 40 years ago on China. Anne-Marie, what's the significance that Republicans weren't invited?
Well, Republicans I believe they were invited and they decided to not go.
Okay.
But you had heard from a minority leader, Kevin McCarthy, saying that if he's Speaker, he would love to lead a delegation there as well. But I would say that the Republicans have supported this trip. They immediately released a statement, about 24 of them, saying they are very much so in support of Speaker Pelosi's visit to Taiwan, and they applauded her visit, and they think that she should be doing this, standing firm in the face of China, but also wanting to make sure that the United States, they're reaffirming that they have not changed their policy of this ambiguous, many would say, one China policy. So there has been a lot of support for her on the other side of the aisle. This has gotten a lot of bipartisan support. You know, going into this trip, if she didn't go, that is really where you would have seen a lot of the political backlash. And the Republicans would have said that the Democrats look weak in Beijing, which really is not advantageous 100 days out from a midterm election.
Anne-Marie, what's the sense that we get about additional ramifications from China, the response that we've already seen being some of the military exercises and some sanctions on certain goods being exported from Taiwan? What's next?
We don't know yet, but you can imagine it's more of the same. I guess for the military exercises, they've given exact dates. Potentially, those would linger. You also now have a lot of Asian flight carriers having to divert around Taiwan because the Chinese military of the actions they are doing. So I think the big question on the military front is maybe this continues, but for how long does this continue for? And then, of course, when it comes to the trade sanctions, you have China not allowing exports of sand that now Taiwan will likely have to get from the Philippines. This is to make concrete. And at the same time, one of Taiwan's biggest exports is fruits, and China is cutting that off. So you really see the repercussions not on the United States for Speaker Pelosi's visit, but on Taiwan. But at the same time, Taiwan certainly welcomed this. You can just see when the speaker left, you had people trying to get any sort of moment with her, a selfie, a handshake. You know, that would not happen in Beijing.
AMH, Anne-Marie down in DC. Anne-Marie, thank you. We'll catch up with you in the next hour. Lisa, looking forward from here. How do we get these two leaders to meet in person, 1 and 2? Are we anywhere close, anywhere near to removing tariffs on Chinese goods?
Well, okay.
That's been talked about how many times over the last few months?
And it seems like that's off the table. I mean,
Totally.
pretty much people are saying, okay, that potential peace leaf is gone. The question that I have is, how significant is this going to be in terms of accelerating the breach between U.S. and China economically? And that, I think, is what a lot of analyst notes were trying to gauge out. Yes, there are the military exercises. People are not expecting necessarily a huge military altercation. The issue is, how much does the U.S. pull back from China and the other way around as China starts to retaliate economically more than anything else?
China's got its own problems. Mandy Zhu at Credit Suisse put it well yesterday on this program, Tom, when she talked about COVID zero. That's the number one issue for anyone looking at investing there at the moment. It's COVID zero, it's the mortgage boycott, it's the direction of the economy, the data's weak. We've gone over it again and again and again.
To review it, folks, and the math is shockingly simple. The run rate in your brain is China's 6%. And the answer is 3% is unacceptable, and 3% signals global recession. And there's many surveys, John, that look at where China's set right now is beneath those two statistics.
I just looked at the ECFC function on the Bloomberg, Tom, enter China. 4% is the median estimate right now for this year. 4%. There are others, Tom, looking for that 3 handle in that economy.
It is gospel that domestically it's all about jobs. It's keeping people employed and busy within the unique government of China, if you want to call it that. And it'll just be fascinating to see. They need growth badly, and that's going to play into their response to Speaker Pelosi and, frankly, to President Biden.
And trying to avoid any kind of social unrest, you know that. Tom Keene, Lisa Abramowicz and Jonathan Ferro. Your equity market shaping up as follows. Up 1/3 of 1% on the S&P, on the Nasdaq. Up 1/3 of 1% also. Yesterday, dramatic move higher in a 2-year yield. Higher by 18 basis points. Yields creeping higher again today on a 10-year by about 3 basis points to 278. From New York this morning, good morning. On TV, on radio, this is Bloomberg. From New York City this morning, good morning. Futures tracking lower, down about, up rather, 1/3 of 1%, just used to saying down. On the Nasdaq, up by 1/3 of 1% also. And this market up by more than 11% from the lows of June 16th. That's the S&P 500, a big move. Have we seen the lows? Two things matter, earnings and the Federal Reserve. On the earnings front, both Bank of America and RBC pointing out that maybe we haven't seen sufficient cuts to estimates to say with any confidence or conviction that we have seen the lows of this equity market. RBC's Lori Calvasina saying just that this morning. I'll be catching up with her a little bit later. On the Federal Reserve, yesterday was like a coiled spring going into Fed speak. 2-year yields came all the way in, then pop. This is what they look like now. 2s, 10s and 30s up 4 basis points to almost 3.1% after travelling higher by more than 18 basis points in yesterday's session. And what's happened with the curve? We've done that, haven't we? 2s and 10s have just done that and got even deeper. Negative 33 basis points at one point this morning. Right now about negative 31. And Tom, you've got to go all the way back to the early 2000s to see this curve, this flat, this inverted.
Well, it's a rate of change, John, and I'm going to say it as clear as I can. Q3 early, the call of the quarter, pre-immisera at TD Securities. It's not only that we're here at negative 32, it's how quickly we got here.
Lisa, what was she looking for? Negative 40. We're getting closer and closer.
We're less than 10 basis points away, and it seems like that is the road of travel, as a lot of people have conviction to buy the long end, and they move away from the front end because the Fed has to do a lot more in the eyes of so many.
The work is not done, Tom, according to the Fed officials yesterday, and I imagine you'll hear the same thing today.
In November. November is as important as September. We'll have to see on that. Futures, again, up 15, and the VIX 23.51 signals a trading range as we await the jobs report on Friday. We need to recalibrate on equities. That's been our theme here Monday, Tuesday, and into Wednesday. Linda Dissel joins us now, senior equity strategist at Federated Hermes, who can take it back to Westinghouse Credit, a name from another time and place. What that does signal, Linda, is you came out of high school. You've got a lot of experience looking at how you participate, trying to figure out when the bottom is. The drawdown right now is Standard & Poor's negative 14%, down negative 11%, NASDAQ a more painful negative 22%. But you've got to participate. How do you participate not knowing where the bottom is?
Well, I have been around a long time. I was around in the 70s, and I can't help but continue to think that we may be in the 70s again. And if I'm right about that, we had that long period of malaise. We had about 10 years, as perhaps you will recall, when we saw peak inflation 3 times. So to think that we're done with this is silly. And so we at Federated Hermes are suggesting that we will probably be in kind of a malaise, wide range trading market for, who knows, maybe the next 18 months. And we're at the high end of that now. So we wouldn't be particularly aggressive at this point, and we're just suggesting patience.
Well, we're suggesting patience, but you can't be 100% in cash. So what do you go into? Are you suggesting the theme we've heard the last couple of days, which is quality and persistency of free cash flow is the only thing that matters?
Well, indeed. And of course, that is often what really only matters unless you're in a momentum market, which we're not. So when you see pockets of the market getting hit hard or racing, then you have a chance to adjust. And this is a kind of a really nice market for traders. So what you've seen lately is what you saw in this last month, which was very strong, is you've seen money going back into small cap and growth. Well, these 2 areas of the market had been pummeled. So it's that kind of a trading range. And so what I think is a wise thing to do is to continue to look for quality yield, get yourself paid if you don't want to be a trader, and we don't suggest that to anyone. Get yourself paid and look for quality income when you can find it. But so that's where we are right now. We are suggesting quite an overweight in cash, but also value and defensive value.
Linda, consumer discretionary is absolutely ripped off the lows of the middle of June. What business does consumer discretionary have rallying into the weakness many people are anticipating?
Well, it doesn't, and it goes to the kind of trading range that we're in and the momentum market that says, I want to buy the dips. There's simply too much money still out there sloshing around looking for what's next to buy. And, I travel in my job. I speak to a lot of investors, and they say, tell me what to buy. Tell me what to buy. Does this sound like, a very afraid group of investors, while at the same time, the Bloomberg count for stories looking at recession is at the highs you haven't seen since the lockdown.
So we're gloomy.
So it's really a mixed market.
So, Lindy, we're gloomy, and we're putting a gloomy picture, and we're portraying the worries, but not perhaps the actions of investors as well as consumers. The view forward, though, that you have is somewhat different from other people in terms of going back to the 70s, that the Fed will act aggressively, and it still won't be enough, and that you will see inflation remain higher than they would like for even longer. How do you partition that into this idea of what's safe? I mean, I think about this. I know you focus in the equity world, but from the bond perspective, that doesn't give people confidence to go into the long end of the yield curve, even though that's what they've been doing. How does that translate into the equity world in terms of safety?
Well, yeah, no, and as the long bond goes, or the 10-year bond goes, we're thinking maybe, you finish at 3.25% this year, and maybe you finish 2 years from now at 3%. So if you can get a 3%, the head of our bond department is suggesting to me that, by the end of this year, you may get 3% on the shortest term money. So we're suggesting, stay with quality there, stay in the short end. And we're not happy at all with investing in credit right now on the bond side.
Okay, but in stocks, where are the safe spots? Is it big tech? Is it a big oil? Where are you seeing the sense of a ballast?
Yes, and that of course is where you have to ask yourself if we're going to get into a recession or not. We still like energy very much. We still believe that the dynamics, even though this globe could go into a synchronous recession, we still think that the dynamics for oil are very, very strong. Right. Even look back 15 years, they're the cheapest sector the FANG stocks, the big tech stocks, the big growing stocks that gush cash flow probably still will if we go into Malay's situation. So you're getting more into that range again, where they're starting to look interesting.
We've got to advance this further, Linda. You are remarkably cautious, and I would suggest cautious for the optimism I've seen over the decades at Federated Hermes. If that is the case, Linda, and you say this is the dismal 1970s, what do the other stocks do that don't have that ginormous and persistent free cash flow? Are you talking single-digit multiples? Are you talking a blended sub-15 PE multiple?
Well, no, we wouldn't go that far right now. We still think that the economy is still reasonably strong. I mean, we did all the damage this year to date, as you know, in the PE multiples. They look pretty good right now. So what we're suggesting, and if you were believing in a kind of a malaise situation, which maybe has something to do with I'm getting to be an old lady over here, is that it's not terrible, but we should just temper our expectations for returns. Tempering your expectations for returns can get you back to where you might say, well, if I get an 8% return for the whole year, that would be a good year. And so that's the kind of thing to look at. Not crushing earnings, just slowing down of earnings. We're near record earnings. We still are near record cash. We have a job market that is as tight as a drum, which means that we're probably going to see, continued strength. But I do want to make this comment to you, which is the consumer confidence of the more well-to-do income segments is below that of the less well-to-do. That is a rarity, and you generally only see that when you're going to go into recession, which we're not calling for, but I'm just saying.
Linda, thank you. As always, Linda Dussel there on this equity market. Speaking to what basically Andrew Hollenhorst is saying at Citi going into payrolls on Friday, Tom, which is that the labour market's still going to show some strong data, and ultimately the Fed's going to have to go big again in September.
Yeah, but they're from two different worlds. I mean, Hollenhorst is doing economics, and Linda Dussel's practicing what to do in the equity market. And John, I can honestly say I've never seen a harken back to the 70s like that in years, 22, 21, 20, whatever there. And, you go back to the dismal 70s, and I didn't hear her saying this is the dismal 20s, but, I'm thinking back, like, John, to the songs of the time.
Okay.
The dismal 70s.
Is there something you want to share?
No, she stood there bright as the sun on that California coast.
Goodness me.
He was a Midwestern boy on his own. She looked at him with those soft eyes so innocent and blue.
You serenading me.
John, what depresses me is how many people
Really
younger
touching.
have no idea who
That's
Bob
what depresses
Seger is.
you.
I mean, Bob
is
Seger
depressing me.
defined the dismal 70s. It wasn't Olivia Newton, whatever her name was.
I'm going to tell you what Laurie Calvasina of RBC's got to say.
Yeah, great note this morning. Great note.
Much better than expected 2Q22 results have painted a picture of resilience for corporate earnings and supported that any coming or current economic downturn is likely to be short and shallow. That's been supportive of stock prices over the past few weeks, but going forward, it also tells us, and here's the important piece, that the rally in stocks is fragile, given the possibility of further downward earnings. RBC's talking about that. Savita Subramaniam over at Bank of America is talking about the exact same thing, Tom.
Yeah, I mean, there's a lot of different opinions out there. But, John, what I'm watching here, and I don't know, John, if this is an August story, the people with a very cautious equity view, do they start migrating upward because of the resilience that we've seen in revenue by 100 S&P points?
Did they get crowded in? Did they get crowded in? BNP Paribas, Lisa, put out a note in the last couple of days. They say yes. This is going to crowd some investors in the short term.
Yep.
In the short term. How much does this mean, though, that in the longer term, people are not aware of the weakness in some of the areas of strength that people have been talking about, whether it's services sector spending and the travel sector, whether it's the balance sheet of the household? If you take a look at the savings rate, it is absolutely plummeted. At what point does that start to bleed into retail sales more than we've already seen, and then into the forward projections of earnings?
Can I finish on a tweet from Chancellor Scholz?
Oh, please.
Here's one for you. Nord Stream 1, as we all know, is running at reduced capacity. You've got the Russian side saying this is about turbines and servicing turbines. Chancellor Scholz on Twitter 10 minutes ago, I saw it with my own eyes at Siemens. The service turbine is there and ready for operation at any time. It just has to be requested by Russia. There are no technical reasons for reducing gas supplies, Tom. That from 10 minutes ago.
But was it just a photo op? I'm lost. Javier Blas today on France is brilliant, by the way. I'll put that out on Twitter.
Futures positive, a third of 1%.
You don't want to hear more Bob Seger?
Coming up, Ellen Wald of the Atlantic Council may or may not be joining us because she might have run away
He'd headed
after
west
hearing the
because
singing.
he felt that a change was doing good.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. House Speaker Nancy Pelosi says now more than ever American solidarity with Taiwan is critical. Pelosi spoke after meeting with Taiwan's leader. She's now on her way to South Korea. China has strongly protested Pelosi's trip. She's the highest-ranking U.S. official to visit in a quarter century. To retaliate, China will conduct military drills around the island. It's also restricting some trade with Taiwan. Traders are waiting to see whether OPEC and its allies will heed a U.S. call to increase oil supplies. The OPEC Plus coalition is meeting virtually today. A Bloomberg survey suggests that the alliance, led by Saudi Arabia, is more likely to keep output steady in September. And in Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And water levels in Europe's Rhine River are getting close to the point where it would have to effectively close. That would put the transport of large quantities of goods at risk. Coal shipments are already restricted by low water levels. That makes coal more expensive, which raises the price of operating coal-fired power plants. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Seeing demand destruction across the board. Some of that, in some of the base metals and things like that is due to zero COVID policy in China, which could reverse in the fall potentially. But the charts don't lie. And they're telling me that we've seen a peak in commodities, and if we're going to have a recession, then they're probably going lower. So we're continuing to be neutral in energy.
That was Mike Wilson of Morgan Stanley from New York City this morning. Good morning. Tom Keene, Lisa Abramowicz and Jonathan Ferro. Futures positive, a third of 1% on the S&P, and the Nasdaq 100 positive too, up a third of 1%. Yields higher yesterday by 18 basis points on a 2-year, just unleashed by President Daley by just saying we need to do more. Everyone lined up to say this, and then it happened, and then markets still responded like they were surprised. Yields up by 3 basis points on a 10-year today, 277.93. If you like the Fed speak, you get more of it today. Bullard, Mester, yesterday, Harker, Daly, Barkin, Kashkari. That's your lineup for today. Tons more Fed speak still to come, Tom.
Okay, we got to stop here, John. I thought forward guidance was dead. Didn't we get that memo like 2 cups of coffee?
They need to tell us how they're going to interpret the incoming data, Tom. Just re-establish the reaction function. I'm with you, it's frustrating, I know. Yeah. But based on what happened with markets over the last week, the easing of financial conditions, we had guest after guest saying this is an unwarranted easing of financial conditions. This Fed has more work to do. They reaffirmed that effort just yesterday. Tom, this tweet from Javier Blas. Speaker Pelosi, of course, has left Taiwan. She's on the plane right now on her way to Seoul. Yeah. This is what Javier Blas has got to say on that visit to Taiwan. Quote, it's fair to assume that the chances of China ever joining the US G7's Russia oil price cap initiative have gone considerably lower. He goes on to say, without China, you don't have India. And without either, well, you don't have any emerging nation. And Tom, some people might go on to say, without any of that, you don't have an oil price cap on Russia.
I'll just say, as we mentioned with Anne-Marie Horton, that right on cue, the moment she left airspace, you saw, led by the Washington Post, the beginning of criticisms of her trip. And we'll have much more on that through the day, and particularly as Speaker Pelosi goes to South Korea. Right now in oil, Ellen Wald with us, senior fellow at the Atlantic Council. Ellen, I want to talk about the mystery that's out there right now. I've been humbled by this over the years. We game supply dynamics of oil. We game demand dynamics of oil, and we get one or both or all wrong. How great is the mystery right now of supply and demand into next year?
You know, it really is a big question because, there are considerations in terms of whether we're going to see a recession and how deep that would go. If we remember back to 2008, there was a huge drop in oil prices that even necessitated OPEC taking some very significant action when the recession hit. So we could definitely see something like that. But, the jury is still out on whether we see that or whether we continue to see strong demand simply from so much pent-up pandemic demand.
Well, your job is not to model Brent crude from rounded up to $100 a barrel down to 80 or up to 120. That's really not the Ellen Wald Act. But you can talk about the power of the players. In OPEC Plus, what is the power this morning of Saudi Arabia?
Saudi Arabia definitely has the upper hand here, though because they're in this larger OPEC Plus group, you really can't exclude Russia and the UAE as the other really big, important players right now. And so it's really going to be about not just what they want, but also how they see the market, especially for the OPEC players. They're really very much into their assessment of where they see the market. Do they think that we are in a supply shortage, or do they foresee a supply shortage emerging probably between now and the end of the year? That could trigger them to do some sort of a modest increase in production quotas. Of course, the question then arises, will we actually see any output increases because so many of the OPEC players are tapped out?
Well, that's exactly where I was going to go, Ellen. How much more can they increase output at this point?
Well, if you look at Saudi Arabia, which is the big player that has the most spare capacity, they are producing either at 10.55 million or 10.65 million barrels a day, depending on whether you believe the Saudi reports or an external source. Starting now in August, their quota is up to 11 million barrels a day, but that's not something that they have regularly produced at ever. Really, I think twice we've seen them hit that mark, and then once we saw them hit the 12 million barrel a day mark. It's not a rate that they are really comfortable producing at, particularly because they're focused on the health and the long-term health of their reservoirs. So I think we could see Saudi Arabia increase a little bit, but I would not expect to see 11 million barrels a day from them anytime soon.
Ellen, perhaps this meeting is going to be 12 minutes long, perhaps 14 minutes as they make some decision. I am wondering whether they have any assessment of how much demand has actually been destroyed in the face of higher prices versus the ongoing requirements that people have to just get around and the demand for travel.
Yeah, I think that the demand for travel this summer and the fact that people have made a lot of plans is potentially masking some of the demand destruction that we might be seeing from the higher prices. Inflation is really starting to bite, especially in the U.S. It's going to bite more in Europe as well. And so I think that we will see OPEC looking at that and looking at signs for demand destruction as the summer travel season winds down across the U.S. Many schools are starting up, and that kind of signals the end of a big demand season. Of course, then they've got to look, though, at China and India, which are the big emerging players in the demand picture, and whether or not inflation is biting there.
Ellen, awesome to hear from you. And I understand you're down in Florida and the aircon just broke, so our thoughts are with you this morning. Ellen Wald of the Atlantic Council. Ellen, thank you. Just to guide you through this morning, or rather this afternoon over in Vienna, 1 p.m. local time is when the Joint Ministerial Monitoring Committee meets. Then the OPEC Plus ministers meet about 30 minutes later. So that's all going to take place in the next 30, 40 minutes or so. And Tom, the main event for so many people, after that meeting in Riyadh between the Crown Prince Mohammed bin Salman and the President of the United States, will President Joe Biden get anything whatsoever from these upcoming meetings?
But this is well said, John. Is that the dominant theme, or is that a sideshow? And I would suggest, because of Europe, what we saw with Scholz and the photo op with whatever it's called, a combine reactor, whatever, all of a sudden maybe the Biden discussion is secondary. I'm not sure on that.
I would say the regional bias from this perspective is whether the president gets what he wants. Tom, at this meeting in Vienna, I have to say you'd have to be looking at the recession story that's emerging worldwide and the deceleration in global growth. China's got difficulties, Europe's suffering, and the United States, in the minds of many people, is heading in the wrong direction. Lisa, do you want to loosen up supply going into what could be a deceleration in demand.
That's the reason why I'm curious to see if they give any guidance about how much demand destruction they're already seeing. If they emphasize that, if they emphasize the slowdown, could that be basically an indication of just what you're saying? They don't want to release all of their supplies at a time of cooling growth.
We'll guide you through the headlines as they come through from the team here at Bloomberg as they monitor that OPEC Plus
we were
meeting.
supposed to be there, weren't we?
You thought we should be there. I'm not sure anyone else was on board with that.
Yeah, I mean, we sold them. It's a 12-minute meeting. We got to be there.
You wanted to be in Frankfurt, then Vienna for 12 minutes. The 12 minutes thing drives me nuts.
I know, that's why I said it.
I know you did. I was sitting here laughing as you said it. 12 minutes to have a meeting. Come on.
We each get 4 minutes.
What are you discussing? What are you actually discussing?
The world.
Really?
Politics.
Really?
Oil.
No.
Done.
Up a third of 1% on the S&P from New York. This is Bloomberg.
The Fed had articulated a bit of a focus on growth. We know that they're not there yet.
The Fed is focusing on inflation. Inflation is still rising.
They want to create some slack in the economy without causing a recession.
The view here is that the Fed actually will remain aggressive in trying to curb inflation and, as a result, increase recession risk.
I think they want to be really cautious about pivoting too soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
This hour comes with a warning. Tom has been singing repeatedly over the last 60 minutes. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures turn positive a third of 1% after a tidal wave of pushback from Fed speakers yesterday.
Oh, the Fed speakers are there today as well. And all of it, John, to me, frankly, is into what really matters, which is Jobs Day on Friday. The importance of this off the JOLT survey of a couple days ago is, I think, way more important than what Fed speakers are going to say.
And Tom, looking for something like 250,000, a step down from the pace of the last few months.
Yeah.
250,000 is the estimate. The previous number, 372.
When I got in this morning at 5:52. I'm sorry, a little exaggeration there. John, I'd really emphasize that the jobs number is way above normal. We're miles from a normal non-farm payroll report.
Compare it with the job openings of yesterday, Bramo. Things are starting to happen in this labour market in a way that they weren't last year.
And we're hearing it anecdotally from companies as they report earnings. They're pulling back their hiring intentions. They're not expecting to be as ambitious in their expansions. And yes, you have seen resilience in some of these earnings, but Lori Calvasino's note, which you've been mentioning throughout the morning, John, really highlights, have companies really adapted to what is to come? And I point to Under Armour coming out, ratcheting back, cutting their full year forecast for this year and next year in the anticipation of that weakness.
We haven't ripped off the Band-Aid.
Yeah.
I think that was the line in her research this morning, Lisa.
How much is that the case? And then other people would push back and say, people are still spending. You're still seeing that resilience. Maersk came out and said that they see that the U.S. is really a beacon of strength because of people continuing to spend. It's the American way.
But this is really important, Lisa. I'm glad you bring this up. You can't conflate a cash flow monster like Maersk with all the challenges at Under Armour. There's a whole group of stocks out there that were troubled before this mess, and they're still troubled into it, and they're adapting. I mean, they're not all Peloton. I get that, but there's a group of stocks that can't be conflated in with the power players like Maersk.
Consumer discretionary, Tom. On that particular part of this market, those companies are going to have a difficult time if this economy plays out in the way so many people on this show anticipate it will.
Cut to the chase. Am I going to wear Lululemon or am I going to wear Under Armour? I mean, it's a no-brainer.
Lululemon have a great new line of sneakers for women, and I'd like to see them do it for men too. Because I like the look of them. They're very slick.
I do too. They're out front. I mean,
I noticed that recently.
You know, I'm not going to give up the Jack Purcells, but hey.
Lisa's super excited for more style talk from you and I, Tom.
I'm picturing
we
you
all
both
three
in yoga pants and
in the gym,
wondering in a
just
gym.
doing yoga together.
Oh, we've
doing
seen
yoga.
that at the Mance, the walk-up I live at. We've seen Ferro and me and Lululemon. Are all three of us together for Jobs Day?
We are, Tom.
Yeah.
I'll be there for payrolls. Lisa, I once went in the gym in our old building, and I enter and there's Tom working out, TK working out, putting in the effort. He's got a weights regime from his ice hockey days. Yes.
Was he wearing Lululemon pants?
Weights everywhere. Weights everywhere. As you can imagine, the bench just sort of like toppled over. Anyway, that's a story for another day. Futures right now at 0.4 of 1%.
Or at least next hour.
On the S&P. On the NASDAQ, up 0.4 of 1% as well. Yields climbing higher by 2 basis points on a 10-year, 276.83. Yesterday, the 2-year yield up more than 18 basis points. Crude this morning, down about 0.9 of 1%, Lisa, 93. Let's call it 50.
We are not in Vienna, but if we were, we would be tracking that 12-minute OPEC Plus meeting. They are expected to increase output. And, John, you were mentioning earlier how much they're going to give a nod to President Biden, that meeting with Saudi Arabia was successful, that they got what they wanted, the U.S., from Saudi Arabia in terms of increased output. But my ultimate question is, how much can these oil producers increase production at a time where they're bumping up against their peaks? At 10 a.m., we get U.S. ISM Services Index for the month of July. How much do we see an ongoing softening in the service sector that's supposed to be rebounding? This was supposed to be the rotation from goods to services. We've seen the rotation away from goods, but even services is showing some signs of pulling back. And we saw that with certain travel stocks actually coming off some of their highs recently because there is a weakening in the underpinning data as people pull back on discretionary spending. And we are getting a lot of earnings, but we are also getting a whole host of Fed speak. We were going to be hearing from Patrick Harker, Mary Daly, Barkin, Kashkari, all of them coming out to talk about this. Does it make sense to see the 2-10s yield curve going down to the most inverted going back to the year 2000? Does it make sense that the market was basically pushing back against the idea of rate hikes to the extent that they were a couple of months ago, John, given that we are expecting still 8.8% next week on the CPI? Inflation may be coming down, but to what and how quickly?
And core's going to remain punchy, according to the estimates we've all seen so far. Lisa, thank you. That's your day ahead, the data, the meetings, and all of the above. Kristen Bidley joins us now from Citi Global Wealth Management. Kristen, I was going through the notes from you, and this just jumps out to all of us. We have shifted to our most cautious yet still fully invested portfolios since the first quarter of 2020. Kristen, what does that mean?
So what we've said, and we've said this for the past couple of months, is really looking at where we could go from here. And so there's 3 different scenarios that we could see for markets and for the economy: robust, resilient, or a recessionary scenario. Robust, really strong growth. I don't think anyone is really calling for that. We have right now about a 50-50 chance in terms of tipping over into a true recession, not a technical recession, or seeing that resilient, slowing growth environment. And what we want to do is prepare our portfolios for both. So the changes that we recently made in terms of investing in high quality equities, we've been there all along, really year to date and starting in Q3 of last year, upping our quality in our fixed income portfolios. And we also pulled back on some of our commodity positions, energy positions, due to the fact that we're seeing some of those inflationary pressures abate. And that was really more in our portfolios for a hedging purpose than any type of long call.
Kristen, you're so good down the income statement. What did you learn about margin dynamics? I believe we've got 70% of earnings in right now. What have you learned about what we need to study down the income statement?
So what we need to look at really going into Q2, the end of Q2 earnings and Q3 earnings, I think when we look at this rally that we saw in July, I know a lot of people pointed to that there's a potential Fed pivot, some dovish comments. I don't think that was it at all. I think earnings showed some resiliency that was not anticipated.
But where was it on the income statement? I get the earnings were there and we chat up revenues as well. Was this about gross margin? Was it about EBITDA dynamics? Where operating income? Where was it on the income statement that you saw?
It was actually a top line revenue. And so I think when you look at the top line revenue growth that we saw, I think that was surprising because everyone was looking, I don't care what sector you're looking at, you are looking at consumer spending. Consumer spending is 65% of GDP, and we were trying to look for cracks in the consumer backdrop in Q2. We started with financials. We looked at the loan loss reserves, better than feared. Basically, everything came out better than feared when it came to the consumer. The only real cracks that we started to see were in the mass market retailers, right? Like Walmart, Best Buy. We saw some commentary there in terms of the shift in consumer spending pattern. And this is why when you look at our portfolio and how we're allocated, we want to prepare for those 2 different situations, resilient or recession, because from here, if consumers are shifting their spending patterns, if they're pulling away from services, if we're seeing some of that dynamic over the summer that really was just revenge spending and travel and getting a lot of that out of the system, And now they're preparing for a recession, along with companies preparing for a recession. That's going to start to flow through to earnings. And we're going to see some estimates revised down from here.
We hear the phrase data dependency all the time. What is your data dependency as you try to gauge whether there is a broadening out in that weakness of consumer spending that we saw anecdotally in the Walmarts and the Targets, but not that much elsewhere?
Yeah, so I think what we're going to have to look at is really some of the data around whether, so take inflation, right? And I think what people can agree upon right now, growth is slowing. Core inflation is actually proving persistent, but headline inflation is slowing on energy prices. So I think this tightrope walk that we're going to have is really on the sense that some people, the more resilient bulls, are pointing to commodity prices coming over, gasoline prices coming down. But I think you still have the shelter costs, right? You still have that housing affordability has deteriorated substantially. And so that balance that the average consumer is really walking through. So I think you can see spending patterns in credit cards. You can see overall consumer patterns there. And then looking through in terms of the inflation dynamics that we're facing and whether some of that core inflation is stickier than expected.
Kristen, super cautious. It's great to catch up. Kristen Bidley there of Citi on the latest. Here's the latest out of Taiwan. Speaker Pelosi has left Taiwan. We confirmed that about an hour ago. She's heading to Seoul. We had a couple of people on the programme yesterday who said it was Speaker Pelosi's visit might end up being Taiwan's problem. A couple of ministers speaking at the moment, Tom. Here's one. Taiwan's Transport Ministry said all flights in and out of Taiwan will use alternative routes. That's one headline. Here's another. This from the digital minister out of Taiwan, commenting on cyber attacks at a briefing. They've strengthened security for key infrastructure. Just some of the headlines, Tom, coming through at the moment.
Well, yeah, those are. I guess those are expected, and I think the geography of the South China Sea is what it is and immovable. But to me, it's just very sequential. And John, it's got to be centered, as I mentioned at the top of the show. I think I was here for that. Is the basic idea of how does he meet with President Biden? How does he play a meeting with Biden back with all the domestic challenges of China? I don't get it.
I can just about confirm that you were here for the top
was
of the
I
show.
here? I wasn't away.
Just about. I can confirm that. Just about.
Well, you know, there was celebratory last night over the Padres.
I can tell you've been having a good time. Well, I know. Lisa, to Tom's point, to put that meeting together, face to face, in person, gets a little bit harder after yesterday.
Although I wonder how much they knew that this would all happen, how much this was basically the conversation that they had last week, because as people started to talk about it, it started to have a more and more contentious tenor to it, given some of the communications, the most contentious in years between the U.S. and China.
We'll guide you through the latest headlines and the latest headlines from this as well. The Joint Ministerial Monitoring Committee over at OPEC Plus, that meeting has just started, according to delegates. We'll bring you the headlines as they come through on this day in Vienna with OPEC Plus meeting, and some people speculating whether we get an OPEC Plus output boost. It's OPEC Plus Wednesday, Tom. You excited? I know you are. It only lasts for 15 minutes.
12.
Futures up 0.5%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi has ended her trip to Taiwan after pledging the U.S. would not abandon it. The House Speaker reaffirmed American support for the democratically elected government in Taipei, despite more threats from China. Beijing has announced military drills to protest Pelosi's visit. China also announced limited trade sanctions on Taiwan. The Federal Reserve is pushing back against the idea that policymakers may pivot away from tightening. 4 Fed district bank presidents highlighted in remarks on Tuesday that there's no sign that inflation is easing, and that helped trigger what was a surge in Treasury yields. And voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy, and voter turnout was high. 4 other states will hold similar votes in November. Over in the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It's a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. And CVS beat expectations for second quarter profit. The drugstore chain also raised its outlook for the full year. CVS saw growth across its pharmacy, retail and insurance divisions. That was helped by sales of over-the-counter COVID tests. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labour market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
The United States will not seek and does not want a crisis. We are prepared to manage what Beijing chooses to do. At the same time, we will not engage in saber rattling. We will continue to operate in the seas and the skies of the Western Pacific as we have done for decades.
John Kirby there, the spokesperson for the US National Security Council following Speaker Pelosi's visit to Taiwan. With Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Futures are positive. Another lift here, up 0.5% on the S&P, on the Nasdaq, up 0.5%. Also, yields creeping higher by 2 basis points on a 10-year, 276.65 on a euro. Stronger euro, euro dollar 101.91. And a look out below crude, down about 0.4%, $94 on WTI. That OPEC Plus meeting, Tom, over in Vienna, starting in about 11 minutes' time.
I know, and it'll be 12 minutes long.
And ending 12 minutes later.
Each of us gets 4 minutes coverage. And
Tom, I mean, I joke about it, but whenever we speak to them, I find it infuriating, given what's going on in the global economy at the moment. The energy crisis that so many parts of the world is facing, and the cartel gets together and has a discussion that lasts 15 minutes.
They have the same PR people as I have, you know.
I think it's ridiculous, Tom.
There's what it is, and we'll continue to monitor that seriously. And again, Javier Blas and our hydrocarbons team just doing a great job covering these dynamics. Right now, Anne-Marie Horton joins us, our Bloomberg Washington correspondent. Anne-Marie, Speaker Pelosi, after Seoul, after Tokyo, will fly back, and perhaps we'll have to do an end around and fly around the state of Kansas. Extraordinary election results last night. And what it's about is what put Biden in the office, which is turnout. All of a sudden, there'll be lots of stories on turnout. Let's get out front. Anne-Marie Horton, brief us on how important turnout is for both parties.
Well, it was huge last night for Kansas. I mean, you look across the primary map, and it wasn't any individual candidate that stole the show. It was this referendum in Kansas about whether or not there should be amendment to the Constitution, which would give the lawmakers in that state the ability to either restrict or ban abortion. And overwhelmingly, individuals in Kansas came out and said no. And this is a state that the former President Trump led by 15 points. So now, as you say, Tom, there's going to be a lot of stories, there's going to be a lot of momentum for the Democrats to say abortion is a live issue for the midterm elections and even the 2024 presidential election.
But will people turn out for someone as ancient as Biden and Trump? How does turnout play into the gamesmanship to 2024?
Well, I think if you look at it based on issues, these individuals came out like it was a November election to vote on a specific issue. If the Democrats or Republicans are able to harness an issue and attach that to a candidate, potentially. But what you're talking about here is, do these two individuals, can they get the fanfare of people to come out and be excited to vote for them? And a lot of the reporting is that from both parties, they want to see a shakeup. They want to see a younger generation.
Anne-Marie, harnessing an issue, and one of them has been gasoline prices in addition to the abortion issue, very much bringing people to the polls. We are going to be hearing, after what we assume will be a very short meeting for OPEC Plus, what their decision will be about output. What does this president want to see after making that visit, making those outreaches to the kingdom, and now expecting something in return?
So the president said when he was in Jeddah that the Saudis shared his urgency and that he expects more oil to come on the market in the coming weeks. this is that coming week. This is the OPEC meeting, August 3rd. And while really everyone is expecting the status quo to maintain, if you look at the Bloomberg survey, some potentially are saying a modest increase. The White House would view a modest increase, I imagine, as a win, because when you look at the global oil supplies, there's not much spare capacity left. So even if the Saudis are able to pump a little bit more, this would be a win for the White House. They would just need to explain the dynamics to the American people, that they don't have potentially a whole lot to give, and you don't want them going to max capacity because that can blow back. So that's going to be the issue they need to play in terms of the messaging. I would say if there's nothing out of this meeting, potentially that would be harnessed by the Republicans as saying that was a failed meeting of the president going to the kingdom. But we should know, we've already seen Riyadh over the past 2 months incrementally start to increase production. So there already has been some goodwill outreach from this meeting for the president.
And where you covered OPEC for years, why are the meetings so short?
Well, that's a great question, because I've been to meetings where they've extended into literally days and weekends. I've been stuck in Vienna covering them.
Yeah, you milked that.
Yeah, the expenses were pretty good, too. Listen, what I would say is this meeting is no one is reaching their quotas, right? You have a number of countries central to OPEC not being able to hit their target. So you pretty much come in, know where everyone stands. There's no major issues at play that are huge debates, besides, of course, whether or not Saudi Arabia or the UAE is going to pump more. A lot of this is agreed upon behind the scenes, and a lot of it is agreed upon at the highest levels of the kingdom and also Russia. Russia is going to be a difficult one for the Saudis to thread. They need to make sure they keep Russia on board of this alliance. Russia does not want lower prices. They're already selling their crude at discounts. They need to keep the price as high as possible for maximum profit.
Hey, mate, you can't talk about the expenses live on air. It's just not the way forward. Anne-Marie, thank you. You sound like Tom. I mean, Tom can say things that I just can't say. Calling the former president, the current president, ancient. Can you imagine what would happen, Lisa, if I said that?
Why are you asking me to weigh in on this? Go ahead,
They're going to be 80, Tom. Please.
No, I think this is a valid issue, and it's featured. Greg Valliere mentions it.
I agree.
Mike Allen of
Tom,
Axios
what people are
has
thinking.
it this morning.
Tom,
it's what people are talking about.
Couldn't agree more. This is what Javier Blas is saying. Do you know what, Tom? I love Javier Blas Unleashed on Bloomberg Opinion. This is what he says out on Twitter right now. At the current rate, I fear that President Joe Biden consumed more jet fuel travelling on Air Force One to Jeddah than any extra oil barrels OPEC Plus may agree to provide the market in September, Tom. The OPEC Plus meeting starts in about 5 minutes' time.
This is not the topic at hand. What matters is somebody out there, I'm sorry, folks, I don't have it in front of me, is going after Taylor Swift, who's living the summer on a private jet.
I saw that.
I mean,
the biggest polluter on private jets,
this
and
is
of
like
all the big celebs.
They call it, in Sweden, they call it like jet guild or something. They got a phrase.
She says she lends it out to friends, though. I mean, this is a, Taylorgate.
So the friends don't fly commercial either. They fly the private jet.
It's a real consideration.
We keep very careful track of this with the surveillance Gulfstream. I mean, we're really trying to be responsible. Francine's on my case nonstop.
Are these like 20-minute flights? Are they those really short flights where it's sort of up and down?
No. But, I mean, Teterborough's Teterboro.
You're asking him because he's got flight tracker on one side.
I think if you're a high-profile individual with a security entourage that is going to disrupt my commercial flight, go away.
My carbon
If you're lending the jet to planes, if you're lending the jet to friends, I mean, come on, what's the point?
I mean, the problem is we got the surveillance Gulfstream, and Lisa's carbon footprint is Birkenstocks.
Bramo. It's all Bramo.
Yeah.
It's all Lisa's fault. It always is.
Always.
Futures, upper half of 1%. Do what you like for your friends, okay? Equities doing okay here, up a half of 1% on the S&P this morning. Good morning. On the Nasdaq, up about 0.6%. The outperformance on a Russell of small caps up 0.8%. And a long list of people just lining up to tell us that we might not have seen the lows because ultimately we haven't seen the cuts to estimates. Recession on the story on the horizon, Tom, and yet everyone's saying that earnings haven't been cut enough. It's Citi, Just moments ago, Kristen Biddley, 30 minutes ago. It's Bank of America, it's RBC, all saying the same thing.
We're going to get to this with Mike Schumacher in a moment with a real global view from Wells Fargo. But, John, I'm sorry. What we're missing in America with our American focus is Europe is a mess, and critically on a marginal basis is messier than a week ago, a month ago, a quarter ago.
It's the problem that Europe could get messier, Tom, on the energy front. And that dispute between Russia about what's going to happen with that gas turbine. To see Chancellor Scholz, Tom, out on Twitter, effectively saying, the turbine's ready to go. I've seen it at Siemens. The Russians just aren't asking for it.
Well, you know, and Javier talking about France, I mean, it's there. And part of it's the calendar. Guess what? It's August. August is closer to November than July was.
Getting closer and closer to the end of the year when it starts to get colder and colder. In the bond market, Lisa, very frustrated with all of this. Like a cold spring, we talked about the 2-year yield coming all the way into the Fed speak. Every single guest on this show said the same thing, that they're going to have to push back, yields are going to pop, and guess what they did? This market was surprised. 18 basis points higher on a 2-year yesterday. This morning up another 3 to 3.1%, let's call it. Much more Fed speak through today. Look out for that. The spread between 2s and 10s inverted. You know that story. Inverted so much that we're back to levels we haven't seen since the early 2000s. That's your bond market. Here's the commodity price story. Going into the OPEC Plus meeting, which starts, I believe,
it's already ended.
And finished, perhaps, already too. Crude, Tom, WTI and Brent crude 100, WTI back to 94. Someone messaged me moments ago, Tom, and said that maybe Phil Mickelson could get the Saudis to pump more crude. That's a golf joke for people that appreciate
a
golf joke.
It's a golf joke.
And Phil's relationship with the Saud. Anyway, whatever. That's the cross-asset price action. Bramo got it.
She'll save us.
Let's get to Lisa for more. Hey, Lisa.
Let's look at some of the earnings that we've gotten, because they're actually really interesting, and they show a very differentiated backdrop depending on which company you look at. CVS Health came out this morning with earnings that beat estimates because of COVID-19 tests. They were actually seeing increased revenues because they're selling so many tests to get acceptance into various places, as we've all become to live with. Those shares up 3.6%. Starbucks reported earnings after the bell yesterday that beat expectations. People are buying more, at least on the overall amount. Part of this is the fact that they've increased prices by 5% over the year. Those shares are up about 1.8%. Airbnb, this is a fascinating story, missed expectations. Their forecast isn't that optimistic. Is this a story about weakening demand by consumers for travel, or is this a story about the world righting itself, going from a pandemic era where people could travel anywhere and stay there forever to now they actually have to come home? And how much is that really the reality? In other earnings news, PayPal very much front focus, Elliott Management taking a stake. It's all about cost cutting. Those shares up even further, Tom, as they are looking for some sort of way to right size a company that had expanded in the eyes of some too quickly.
I missed the story. This was a good news story for PayPal, right?
Yeah, basically you have the activists taking a stake, asking for some cuts, and the market is cheering them. They're also oddly cheering Under Armour after that company came out with weaker than expected earnings, saying that they are seeing some resilience in the U.S., but in China there definitely is weakness. How much that's going to continue. And Yum Brands. Tom, I know that you have a very close feeling toward Yum Brands. This is, of course, the parent company to the likes of KFC and Pizza Hut, which didn't do so well. Taco Bell, though, did very well. Those shares, Bell Talk, those shares up 0.5% as they look toward people buying more burritos.
Lisa, driving the conversation forward, Kristen from 601 Lexington Avenue emails in and says, loves the Bob Seger. And I was going back and forth with her about when you were in Kathmandu, you were singing, you were doing Bob.
No,
I think I'm going to
we're not doing this.
I think it's really where I'm going to.
Tom, I don't know where you thought that I was traveling, but people were coming up to me saying, how was Kathmandu? How were the Himalayan mountains? Did you really get oxygen?
Well, it was a good view.
Thank you, Tom.
Kristen Bitterly, thank you so much for driving the conversation forward this morning. Right now, helping us out, Michael Schumacher with us, Global Head of Macro Strategy at Wells Fargo. And, Mike, I'm going to go all John Ferro on you here because buried in your note is something to watch for August, and that is Italian-German spreads. Your team says this is something, a thermometer, if you will, on Europe that could redound back to the Fed in the United States.
Yeah, Tom, we see that spread going out a fair bit. I know the ECB is watching this like a hawk. It's introduced a new program to try and combat it, but Let's say 10-year Italy goes out to 300 basis points over Germany. Does it signal a crisis? No, but it signals a lack of confidence, and I think that's something markets will focus on pretty intently.
John,
so
I think this
one
is
more barometer.
John, absolutely critical. I mean, you're on it all the time, but right now, all of a sudden, it matters.
Just quickly, Tom, just getting a headline around OPEC Plus that they're proposing a 100,000 barrel a day output hike for September, and TK, that's basically nothing.
Yeah,
that's a drop in the ocean.
Yeah, Brent 100 to 101, boom.
Yeah, crude too. Lisa, turning around, WTI up 0.75% off the back of these headlines.
This is basically just an olive branch to this administration saying, we heard you, we're taking some action, but it has no fundamental bearings on a market that otherwise is constrained by macro events.
An olive branch or a backhand slap? I mean, Lisa, I think they wanted more than this, didn't they?
Maybe so, but what can they do? I mean, to Anne-Marie's point, they don't have the capacity to increase. So at what point do they just have to pay lip service to a president who's looking for a political win? It's unclear even how much that would really even affect gas prices, considering that it's a refinery issue more than just a crude one.
We joke about how much this OPEC Plus meeting might go on for. It could be over in about 5 minutes' time, so I'll bring you the headlines when it concludes in just a moment. Mike Schumacher of Wells Fargo is still with us. Mike, forgive me for that. Just wanted to bring our audience the news. I want to get back to this Fed speak that we're going to hear through the week, through today, into next week, into CPI next Wednesday on August 10th. Mike, you came out up front at the start of this year, and I remember when you said it, I just thought, wow, Mike, that's nuts. 150 on a 2-year, what a call. And we got there so quickly and more, back to 3%, Mike. How much work do you think this Fed still needs to do to get inflation down from 9 back towards 2?
It's amazing even to say it, John. Inflation at 9%. Core, headline, CPI, PC, whatever. It's all some huge number. The Fed's got a lot of work yet to do. I mean, we think inflation is going to be running still at 4+ in core at the end of this year. So let's say the fourth quarter, and probably pushing 2.5 to 3 end of next year. So a lot of work yet to be done. 2-year yield's very vulnerable. We think it goes up substantially from here. So, and I think the Fed's been trying to reset and say, hey guys, we didn't really pivot. You may have thought that, but we didn't do it. So let's get back to basics.
Does Jay Powell, Mike, have a communication problem, considering that this is not the first time that he sent a message that was very different from what other committee members wanted to hear, at least wanted the market to hear?
Yeah, Lisa, I think for Jay Powell, being hawkish is kind of like taking cough syrup when you've got a cold. Your parents say you got to do it, it's good for you, but you don't really want to do it. So he has that sort of unpleasant grin and says, okay, I'll go out there and talk about it, but my heart's not really in it.
So how much is it really important for this market to see him do more than just take his cough medicine and actually buy into a message that the Fed has to raise rates significantly before they believe the story that right now they're basically rejecting? I mean, honestly, I am frustrated. John said, everyone came out and said the Fed's going to be unhappy. The Fed hates to see this rally. They're going to push back. The markets are oblivious. The Fed officials push back. The markets throw up their hands. Oh, my goodness, look at that. I mean, honestly, how much do you have to see before the market believes the hawkish tilt that the Fed is basically saying?
I think what the market needs to see is more and more tightening, not 75 after 75 after 75, but a steady stream of 50s would probably do it. Chair Powell said at the last meeting, hey, look, we're going meeting by meeting. We're going to back away from guidance. Well, the Fed's offering guidance right now. It's going to give us more today. I think the market needs to see those actual rate hikes. So go another 50 or maybe 75 in September, set the stage for more at the end of this year. And I think, oh, by the way, if the Fed were to indicate, hey, we're not going to be done tightening this year, it's going to extend for at least a while into 23, that would catch a lot of people off guard. There's this view that tightening will end in December and then boom, by March, potentially it's easing mode. That seems incredibly unrealistic.
Mike, just quickly, are you over at Hudson Yards now?
I am, that's right, John. Great place, come on down.
Amazing. I'll come and see you
Road
soon.
trip.
Tom, the reason I say this,
Please
Wells
do.
are over there now, others are joining them. Who's downtown anymore, apart from Goldman? TK.
That's a big issue.
Deutsche
Yeah,
Bank taking
no,
over the
big
Time
issue.
Warner Center.
No, it is.
I can't think of many banks that are still downtown.
It's like anything else, and to Stephen Ross, and I know he's in the news right now on other matters, but John, in the building of these things, they sort of they're there, and then they get a critical mass, boom. And I wonder if this is a year coming out of the pandemic where Hudson Yards gets a critical mass.
They hope. Mike Schumacher over at Wells Fargo. Mike, awesome to catch up. Lisa, Midtown West
Thanks,
is
John.
stacked. You've got JP on Park, and I can't think of many names left downtown at all. with the exception of Goldman.
Yeah, I was actually just doing some research, and I can't find a lot of them. I wonder also, part of this is how many people actually go to the floor of the New York Stock Exchange anymore. How much is that not the center anymore?
I've heard it's a TV studio now. That's what I'm told.
I'll get in trouble.
Really?
I might get in trouble for that.
Ken Polcari's
It's a joke. It's just a joke.
screaming.
It's a joke, okay? It's just a joke. Anyway, let me get back to OPEC Plus, because the team over at Bloomberg on the commodities side is absolutely fantastic. Julian Lee said this,
What's
Tom.
he say?
If they deliver a 100,000 barrel a day increase, shared pro rata among the OPEC Plus members, it would raise Saudi Arabia's target by 26,000 barrels a day. That's not even enough to fill one Suezmax tanker a month. That from Julian Lee. I think that's such a great way of breaking this down, Tom.
It is. I mean, you get, and what's great about that, it gets down to the process involved. It's not financial intangibles. This is all tangible assets, like a lot of other things we're worried about, including food.
It's a nice TV studio. Anyway, just for anyone still wondering.
Oh, you're killing me.
It's a bit of theatre.
Theatre.
Futures up 4/10 on the S&P.
I'm glad you mentioned
on the
theatre,
Nasdaq
John.
100 up at 30.
People emailing in like crazy.
Sure
Bob
they are.
Seeger, November of 1975.
Okay.
Coventry Theatre.
Nice.
I believe some of the Pharaoh clan was there.
Coventry.
Big tour on the way down to five nights
Tom.
in London.
Coventry. Plus, remember, half the family were down in Sicily in the mines, Tom.
Well, not in 1975. Come on,
Got to
John.
go a few more decades before that, I imagine, Tom. Sure. Futures are higher, Tom. It's a great day for it.
It is a great day.
An OPEC Plus meeting wrapping up sometime soon. There we go. It's just beautiful. It's beautiful. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi's reaffirmed the U.S. commitment to Taiwan. The House Speaker ended her visit there today after pledging the U.S. would not abandon its commitment to the democratically elected government. China reacted to Pelosi's trip by announcing a series of military exercises. Beijing also imposed trade sanctions on Taiwan. OPEC Plus delegates say the coalition has proposed an oil increase production at today's virtual meeting. It would be a small hike, 100,000 barrels a day for September. This comes after President Biden took a political gamble with his visit to Saudi Arabia and asked for more oil to be pumped. In Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And France is likely to curb nuclear power generation. The utility EDF says high river temperatures restrict its ability to cool power plants. The reductions threaten to further push up power prices, which are close to record levels in both France and Germany. Under Armour has cut its profit forecast for the year. The athletic wear maker is being hurt by higher freight and production costs and by foreign currency fluctuations. Investors are also concerned about the outlook for Asia. Meanwhile, the Under Armour CEO they're searching for a CEO to replace Patrick Frisk, who quit abruptly in May. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
About recession per se, it's are we growing below or above trend? And my forecast for this year is that we'll be growing below trend, but that's necessary in order to get price increases, inflation under control.
That was Loretta Mester of the Cleveland Fed, just a chorus of Fed speakers yesterday. She was speaking with the Washington Post and pushing back against these dovish expectations after Chairman Powell's news conference last week. Was it a communication failure or was it a communication
what do you think?
interpretation?
I think that's an important question.
Failure. One or the other, Tom. One or the other, but you shouldn't get two-year yields moving the way they have done
or
in the last couple of days.
Or the five-year yield. I mean, it's extraordinary.
Couldn't agree more. Futures right now at 4/10 on the S&P, on the Nasdaq up about 4/10 as well. Yields creeping a little bit higher, up 3 or 4 basis points to 278.29 on a 10-year. Crude reverses losses, now gaining by 8 or 0.9% to 95.23. And that meeting has just started, according to a delegate. The OPEC Plus ministerial meeting has just started. So, Tom, set the stopwatch. 7:47 Eastern Time is when it started.
Maybe it'll last as long as Kriti Gupta's chart that she's going to show us right now on bond volatility. Extend it out, Kriti. What do you got?
Well, of course, you were talking about the 2-year yield and the 5-year yield. Well, I decided to look at bond volatility via the MOVE index because yesterday's move in the 10-year yield, I should say, was the second largest move since we saw that COVID crash of March 2020. In fact, it only rivaled what you saw on June 13th when the bond market was pre-pricing in 75 basis points ahead of the June FOMC decision, of course, following the reporting coming out of the Wall Street Journal. So once again, that repricing is really crucial. And that's what you're seeing in this particular index. For our radio audience, this measures bond volatility, like I said, which, by the way, has been on an uptrend since about mid-2020 and is now up very close to levels that you saw once again back to March 2020. Cameron Kreis over on the Markets Live blog made a very key point. There is still a significant gap between what the market is pricing for the end of next year and the Fed's projections. And when you have that kind of gap, it means that these swings are going to be more and more common because it means repricing is going to happen on the daily.
Kriti Gupta, thank you so much. Greatly appreciate that. With a fixed income brief, we've ignored fixed income with the equity markets that we have, and so we need a brief. Now, Ira Jersey, Bloomberg Intelligence, U.S. rate strategist, joins us. Ira, when I see the 5-year do what it did yesterday, at the minimum, I know that's unusual. Let's start with a why. Why are we seeing these gyrations?
Yeah, I think there's two big things. And number one is either a misinterpretation of the Federal Reserve, or like you mentioned, the communication from Powell was reversed basically yesterday, with all of the plethora of Fed speakers basically all saying we're going to be more hawkish than the market thinks right now. That's number one. And then into that, you have not only summer liquidity, but poor liquidity overall. This year, liquidity in the Treasury market has just been very, very poor, basically since the Federal Reserve stepped back from its bond buying purchases. And it doesn't seem like liquidity is going to increase anytime soon.
Let me take an audible. Is China stepping back? And, particularly with what we see in the tensions of the recent week, can they step back and adjust our fixed income space?
Well, it's really unlikely. So most central banks, and China would be included in this, when central banks own Treasury securities, they usually own shorter-term securities. So call it 3-year notes, 2-year notes. So maybe a little bit of some of the front-end moves might come from central banks either not buying or outright selling, although I doubt that they're outright selling. They just let their portfolio run off instead of outright selling securities. And China and Japan have not been net buyers of Treasuries for the better part of 7 years now. So it's not like they've been increasing the amount of treasuries that they own. And the market's gotten so much bigger that they're not as big of a player as they used to be. So it's really, our foreign private investors tend to be much more risk takers. And so the question there is, are they stepping back in an environment where yields in their home jurisdictions like Germany are actually positive now, where they had been negative for several years?
Ira, you're talking about the poor liquidity and the price swings that we have seen that are historic in terms of their scope. I believe that the rally that we saw in the 10-year Treasury, or the sell-off, I should say, in the 10-year Treasury was the fourth biggest in the past 5 years. What does that say in terms of the risk being baked into markets? What's the potential consequence from the deepest, most liquid market not being very deep and not being very liquid?
Well, it still is very deep and liquid, but it's relative to the size, right? So things like the plumbing, so the things like the repurchase agreement market, which is the way that you fund your Treasury positions if you're a levered investor, that hasn't grown, and the Treasury market is significantly larger. So you go back to 2007, the repurchase agreement market is basically the same size as it was back then, but the Treasury market is 5 times larger. So you can see how the plumbing is going to be affected by regulations, by just the fact that you have dealers that aren't willing to take as much risk as they used to be because of both regulations and also their own risk management processes after the global financial crisis. So all of these things have contributed to a much basically liquidity being very good, and then all of a sudden it's not. I call it very fickle liquidity, and I've been writing about this for 9 years now. It's not surprising that we have days like yesterday where liquidity's fine on Monday, and then on Tuesday suddenly poof, there is no more liquidity. And I think that's the risk in the Treasury market right now, is that you're going to see these air pockets where liquidity just completely dries up because everyone's one way and positioning can't shift so quickly. And I think it's just going to happen more and more, Lisa, and it's going to be a fact of life going forward.
It's happened tons over the last year, that's for sure. Ira, thank you. Ira Jersey there of Bloomberg Intelligence. We've got to pick up on the story out of Vienna. That OPEC Plus meeting started about 7 minutes ago. And what they're considering, we understand, is just a 100,000 barrels a day increase. The team here at Bloomberg, Tom, they're putting together a fantastic live blog on the Bloomberg terminal. Just give people a flavour of it. They're calling it a negligible increase to output, Tom, just 100K. Also highlighting, this is Grant Smith highlighting this, that the Saudi Energy Minister, Prince Abdulaziz, is fond of springing last-minute surprises on the market. So this 100K hasn't been approved. It's not been done, Tom, but that's the direction of travel, at least right now. And crude's turned around. We're up 1% on WTI at 95.
Well, yeah, but it's a different kind of 1% at a 101.39 on Brent crude. And, again, the gap between the two is narrowed here. You just wonder how many people are really looking at 110, 120 again? And I'd say that's a pretty lonely crowd, John.
I love what the team is saying right now. If an increase of just 100,000 barrels a day is approved, it would be the smallest increase in OPEC history. Lisa, it couldn't get smaller without being a cut.
Yeah, and this is Grant Smith, and he goes on to say, President Biden said he was confident of further steps from the Saudis, but this is more like the moving walkway you get in an airport. How much is this basically a courtesy, a nod that won't be received well versus what they can do? In other words, how much is it capacity constrained versus we don't really need to raise output, but here you go.
Well, there's the headline. According to a delegate, OPEC Plus agrees on a 100,000 barrel a day supply hike for September, Tom. That headline just coming through.
Well, it's there, and you wonder what it's going to do to commodities in general as they've had the setback here. I wouldn't look for metals to move, but on the hydrocarbons, you got to say it's been a lift, and all of a sudden blinking hard in its
wonder, Tom, how Washington responds to this one. We'll pick up on this story in just a moment with Tom Keene, Lisa Abramowicz and Jonathan Ferro. Futures up, crude up too. From New York, this is Bloomberg.
The conditions are changing where U.S. data is deteriorating.
I don't think this is a high conviction rally. If anything, I think this is much more a bear market rally.
Market pricing rate cuts by the Fed the next year make absolutely no sense.
There's probably going to be a fairly narrow window between the final rate hike, whenever that is, and the first rate cut.
I think ultimately it has to be a hard landing. The runway is just too short.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television. Welcome to the Gloom Hour. John, what a set of gloom there at the opening of the program. The caution out there, it's seriously, it's an extraordinary caution we're hearing. Guest to guest.
Tom, there's a worry that we're going into recession. There is a worry that we have to cut estimates more than we have for earnings. And for that reason, you're seeing the likes of Bank of America, RBC question as to whether the June low was the ultimate low for this sell-off.
Well, it may be the ultimate low, and, equities are up this morning as well, but it is about Fed speak. We had 14 speakers yesterday, 12 speakers today, and on we go. What are they speaking about? What's there to say about September 1? We don't know.
We've got more work to do, seems to be the bottom line. We've got more work to do. We heard that from Fed President Mary Daly of San Francisco yesterday. Apparently some people didn't, Tom, because it unlocked a big move in the front end of the curve. Yields up 18 basis points. Right now, we're super focused on the OPEC speak, Tom. That OPEC meeting starting about 15 minutes ago.
I'll take
we
your
understand,
point.
According to a delegate, they're going to boost output by just 100,000 barrels a day. Tom, that's going to go down like a lead balloon in Washington, D.C.
We've got our experts on it. And again, Grant Smith and company watching every move of the extended OPEC meeting. We watch Brent crude, John. I want to get to Lisa, but John, Brent crude just breaching out 101.70.
We've gone from losses to gains, Tom, in the commodity market.
Well, there we see the commodity market. Well, Lisa, here quickly as well. With the bond volatility we're talking about, what have we seen in IG and high yield? Are they enjoying the full faith and credit volatility of the last couple of days?
Well, one thing that's fascinating is that companies have enjoyed the rally, and they've been selling bonds at the fastest pace that anyone could have expected. That investment-grade bonds, investment-grade companies have already sold all of the bonds that people were expecting for the entire month of August in just 2 days. How much is this taking a window of opportunity that is going to evaporate, or that's how people feel, based on how this pushback from Fed officials is trying to get bond yields higher, saying we have more work to do. We are nowhere near, in Mary Daly's words, getting closer to where we need to be to fight inflation.
On this theme, Sam Stovall is scheduled to join us here in a moment. John, I want to get back to the general gloom that's out there, and it's a caution into a jobs report. Do we presume that the jobs report will be dampening, will be negative?
We're looking for a robust read on the headline, a number of 250K. There's a question, though, as we go deeper into this year, will we see the weakness elsewhere spill into the labour market at a time where the consumer has really struggled with high prices? Energy's come down a little bit over the last few months, Tom. That's good. We've seen gasoline prices decline, I think, every single day since the middle of June. That's good. We need more help than that, though. And right now, Tom, we're not getting it from OPEC. Confirmation from OPEC Plus that they've agreed on a very small increase in September oil production. They've agreed to just 100,000 barrels a day. This after a meeting between the President of the United States and the Crown Prince of Saudi Arabia, Mohammed bin Salman. And the administration was hoping, Tom, that we'd see some signs of this OPEC Plus cartel doing more. And right now, I don't think that's a sign at all, Tom. I don't think that's a good sign.
On the data, $3 up, 99.00, and we're going to print 102 here in about a cup of coffee. What do you got, John?
Futures shaping up as follows, up 0.5% on the S&P. On the Nasdaq, we're higher by about 0.5% also. Yields coming higher by 3 or 4 basis points again, so yields bleeding high yesterday. Again today, Lisa went through the Fed speak. You've got tons more of it today. You've got the ISM services data point coming up a little bit later at 10 Eastern. Look out for that too. The PMI from S&P Global a couple of weeks back, sub 50. Let's see if we get any confirmation whatsoever from the ISM a little bit later. But Tom, front and centre for me is just crude, 95.85 at 1.5%. I'm very, very intrigued to see what the communication from this White House sounds like this morning after going to the Middle East, sitting down with the Crown Prince, being heavily criticised for doing so, and they follow it up with just a 100,000 barrel a day supply hike for September.
And it's not a 120 question, John. It's about getting out to 105 or 110, and we've moved there rapidly.
From the perspective of the Middle East, Tom, and this cartel and OPEC Plus, and that extends to Russia too, if you're setting supply right now, you're asking yourself what the demand picture is going to look like into the year end, into next year, especially with the deceleration out of China, the problems you see in Europe, and ultimately the deceleration here in the United States too. 1. 2, Tom, we still don't really know how much spare capacity these countries actually have. And that's something we keep digging down on every time we catch up with an oil guest. How much spare capacity is there? Because they're struggling to meet the current quotas.
Nobody knows. No, I don't think anybody knows. Ellen Wald was brilliant there this morning. I know Netherlands, TTF, the natural gas over there, really breaching out to new highs going back to the beginning of the war in Ukraine. Right now in the equity market, Sam Stovall joins us. And Sam, I want to look to a headline from Facebook out a bit ago. Meta saying they're going to issue a bond. This gets down to Stovall 101, Sam. Is a dividend increase the same as increasing share buybacks?
Well, I think that not really. It depends on who the investor is. If you're an income-oriented investor, you want the dividend because then you can spend that. Whereas the share buyback, certainly that could help support or even propel the price later on. But you can't really spend the price unless you bring down your principal. So depending on whom you ask, I would say young people like you and me would probably like the dividend.
Sam, what should I do with my energy winners of 2022? They've been hammered over the last month or so. What should I do with them now?
Good question, Jonathan. I would say hold on to them for a couple of reasons. One, I just mentioned dividends, and their dividends are very strong. But if you also look at relative PEs, right now, the S&P 500 energy sector is trading at a 60% discount to their 20-plus year average versus the S&P 500. So this is a group that's going to continue to do fairly well in terms of earnings, in our opinion, going to continue to pay a nice dividend yield. Obviously, from a trading perspective, we've come off of a very, very high level, but I think that the potential for growth is still there.
What's the backdrop for that call, Sam? Is it the expectation that demand hangs in there, the economy doesn't cool as much as expected, or is this an issue of capacity and production, a lack of supply that is going to be met with demand that's enough to keep prices elevated?
Well, I hate to be wishy-washy and say both, but I'll be wishy-washy and say both. Reason being that when you look to the demand aspect, I mean, the market itself possibly going through a bear market rally, possibly starting a very real new bull market rally, because expectations are that maybe this recession won't be as deep as many are currently predicting. And I think if we break above that 4,200 level on the S&P and stay above there for a little while, then that would be a confirmation from a technical perspective that we are headed for much more than simply a bear market rally. So we could end up seeing increase in demand. In terms of supply, sure, I think there has continued to be challenges from supply disruptions. And so when the demand does not fall as much as expected and supply continues to remain challenged, I think that does offer some support.
I don't want to be overly simplistic about this, Sam, but I was looking at the reaction in the bond market as we saw oil prices go higher on the backs of this smaller than expected rate increase or output increase from OPEC Plus. How much are we trading around inflation driven by commodities? In other words, how confident are you that you could see a revival in the economic momentum at the same time that prices for oil stay elevated, leading your energy bets to be valuable and outperformers?
Well, it depends on how you define elevated, because expectations are that we're going to average around $96 for the remainder of this year. And so the feeling is that's certainly a lot better than what we had been experiencing earlier. Also, when you're looking at the materials group, the other commodities category that is seeing a sharp decline in terms of share price, that does anticipate a softening in demand for particular areas as well as the price of them. So I would tend to say that because we are anticipating that we're going to be seeing a gradual decline in year-on-year percent change in CPI, averaging 7.2% by the fourth quarter of this year, and then continuing to decline into 2023, I think that people are going to start to feel a little bit better about that, and that would end up bringing people out. I was at the restaurant the other week, and I had a very hard time trying to find parking. So anecdotally, I'm having a hard time finding a recession.
Sam Stovall, thank you, sir, of CFRA on the latest in this economy. Got to talk about the latest in this commodity market. The intraday chart of crude captures this story perfectly. All of a sudden, we're only considering a 100,000 barrel a day increase to output for September and POP. We go from negative to positive just like that, up by a little more than 1%. It's not a major move, but it's not a major move from OPEC Plus either. And that's the story this morning. 100,000 barrels a day is the smallest output increase from OPEC, Tom, and OPEC Plus in its history.
I want to fold that, John, into what Sam Stovall just said. How much of our audience is framing 7.25% inflation in 6 months? I would say it's a handful of people. I mean, if you have oil here, can you get inflation down to the Stovall level? I'm not sure you can.
We know that people's perceptions of future price growth are shaped a lot by what happens with energy prices, Tom. And energy prices have come in over the last 6 weeks. That's the good news. We also know, though, when you go to pay your rent and you renegotiate what that rental story looks like each year, Lisa, that story is getting harder and harder for people to meet month on month on month on month. And that's going to be sticky. And that's the call, ultimately, into year end, that even if energy comes in and headline comes down, core CPI remains elevated. That story's sticky, and this Fed has got more work to do.
Yeah, and it's not just rents, it's also medical expenses that people are seeing with increasing elevated inflation. I want to hear what the communication is from OPEC Plus as to why they made such a small move. Is it because of a lack of demand, or is it because of a lack of supply or constrained supply? That is going to be key.
They can't meet their targets. We want to hear from them. According to the team here at Bloomberg, we're not sure whether we actually get a press conference from OPEC Plus after this decision. It will be interesting to hear what DC and this White House has got to say about this call. We'll catch up with Isaac Boltanski of BTIG up next.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi has ended her trip to Taiwan after pledging the U.S. would not abandon it. The House Speaker reaffirmed American support for the democratically elected government in Taipei, despite more threats from China. Beijing has announced military drills to protest Pelosi's visit. China also announced limited trade sanctions on Taiwan. And OPEC Plus members have agreed on an increase in oil production for September, but it is the smallest in history, 100,000 barrels a day. This comes after President Biden took a political gamble with his visit to Saudi Arabia and asked for more oil to be pumped. Voters in Kansas have refused to change the state's constitution to declare there's no right to an abortion. It was the first referendum on abortion since the Supreme Court said each state can set its own policy. And voter turnout was high. 4 other states will hold similar votes in November. In the UK, Liz Truss extended her poll lead over Rishi Sunak, suggesting she's on track to succeed Boris Johnson as Prime Minister. The YouGov poll of Conservative Party members showed the Foreign Secretary with a 34-point lead. It's a timely boost for the Truss campaign. Earlier Tuesday, Truss had to make an embarrassing U-turn on a plan to align civil service pay to the regional cost of living. CVS beat expectations for second quarter profit. The drugstore chain also raised its outlook for the full year. CVS saw growth across its pharmacy, retail and insurance divisions. That was helped by sales of over-the-counter COVID tests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This week, will we see the first cracks in the labor market?
There's another shoe out there to drop.
Will the labor economy break?
Can the Fed deflate the demand for labor in the economy without pushing up unemployment?
This Friday, Tom, John, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
We still have a lot of slack in the labor market.
The labor market is going to be seen as to whether it keeps the light green on go, go, go for this Fed.
The July Jobs Report, Friday on Bloomberg Television and Radio.
Markets should not look for any kind of major moves on tariffs. The Biden people have been signaling that, firstly. Anything other than completely lifting tariffs doesn't provide any inflationary impact. So markets shouldn't look for that either.
Always good to catch up with Terry Haynes, the founder of Pangea Policy. We caught up with him in just the last couple of days. From New York City with Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Futures positive 0.6% on the S&P. On the Nasdaq 100 up 0.6%. Also yields higher by 3 basis points on a 10-year to 278.29. That story turning around in the last 24 hours. Bit of data out later. The ISM services read, so some PMIs through the week. Then we get payrolls on Friday. Before that, a ton of Fed speak too. Focus on crude in the last hour or so.
Yeah.
At 1.7% to $96 a barrel. OPEC Plus agreeing on a very small increase in September oil production of just 100,000 barrels a day. Their smallest increase ever, Tom. And this comes after President Biden went to the Middle East to meet with the Crown Prince of Saudi Arabia.
The bid's got a real resiliency to it. I would suggest, John, on Brent crude, 100 to 101 or 99 to 101. Is that okay? So what? If we get a 105 print on Brent, on the global price, what does that say to the White House?
Tom, the politics of this. Do you remember that fist bump between these two?
Oh, yeah. Don't get me going.
That fist bump, what was it worth?
I'm not allowed to
100,000 barrels a day from OPEC Plus?
I don't know.
I don't think that was what they were looking for.
I think the first time you and I met, we fist bumped.
Did we?
Yeah, I think so.
Maybe we did.
I think there's a photo
of you and I fist bumping. Less controversial that, though, Tom.
We're going to get a briefing on this now. Isaac Boltanski is a perfect person to speak to. He's with BTIG and, yes, Director of Policy Research, but writes very informed notes on the synthesis of legislative into presidential politics as well. Isaac, I want to go to a photo op past, the fist bump, and maybe a photo op forward, which is the president meeting with the leadership of China. I mean, what does Mr. Biden need on the photo op past and the photo op forward when we see this morning's slap of OPEC Plus?
You know, it's hard to overstate how disappointing this OPEC Plus decision is for the Biden administration. Frankly, it's the geopolitical equivalent of a slap in the face. The Biden administration made a huge miscalculation. Their bet was they could go to Saudi Arabia. They could have that fist bump picture with the Crown Prince, which carries a bit of political complexity to it, but that would help make an increase in production easier for OPEC. This 100,000 is not worth it, or any of the political baggage that came along with it for the Biden administration.
You were perfect about the machinery of our legislative branch. What does the people of Capitol Hill think about a change in the gallon of gas? They're not looking at every nickel move, are they? But what are they looking at?
Well, look, for a lot of these economic data points, there is it's almost a political Rorschach test, right? Where depending upon where you are on the ideological spectrum, you can use any of these data points in your flyers, in your press releases, on the campaign trail. But the reality is, folks are feeling it at the pump. They're feeling it in their rent. They're feeling it at the grocery store. And I think that is going to pull through to the election. And even though we had some sort of cross currents with the primaries and decisions last night that tell us a little bit of a jarbled story, to me, one of the reasons I have so much confidence that the House is going to flip, Tom, is because of the inflation story. That impact on the pocketbook gives me confidence that Republicans are going to take the House.
Yeah.
Isaac, how much can President Biden come out and seem angry about this, say this is a repudiation of the good graces that he showed? How much does he message that sort of disappointment in this versus at least it's something? In other words, how does he pivot from what you just called a slap in the face from the Saudi Arabian kingdom?
I mean, what we've seen thus far from the Biden administration is that the president will still speak optimistically and positively about this. He will focus on attempting to cajole OPEC Plus on the next decision. But we're going to hear some, I think, pretty sharp commentary from the cabinet members around this. I don't know yet what the underlying justification is. As you said earlier, is this a supply or demand decision? What really drove OPEC Plus's thinking here? But for the Biden administration, they were desperately hoping to get more than 100,000 barrels a day to alleviate the pressure at the pump in the coming weeks and months before the midterms.
The good news is that gas prices have been down every single day since the middle of June. If they weren't heading in that direction, Isaac, this would be much more controversial. Isaac, we always appreciate your time, sir. Great to catch up with you again. Isaac Boltanski there of BTIG. Isaac made the point there at the end, and I think it's an important one. Lisa, we can focus on the political fallout of this decision in the White House, and I look forward to see what they've got to say, particularly after that meeting, especially after that meeting in Riyadh. We also need to be talking about the supply dynamics, the spare capacity that exists at OPEC Plus right now, because oil watchers are fixated on that. Just how much spare capacity is there actually across some of these big nations at the moment? And does that speak to their reluctance to do more than what we've seen today?
Anne-Marie was talking about this, how a lot of the OPEC Plus members have not been able to meet those target output figures. So they haven't even been able to produce as much as they say they will. At that point, how much is this an issue of we're not getting the oil out of the ground we already have? We cannot do it faster. And then you come up with this conundrum where perhaps you have demand coming down at the same time that you have supplies coming down or being constrained. Prices remain elevated even in the face of some sort of slowdown in activity.
Yeah, I don't think this is as simple as what's happening with, say, Russia into Europe right now, where seemingly experts are telling us that they're almost pretending there's a problem with the turbine, Tom, but ultimately it's a political decision to hold back gas into Europe. For the kingdom at the moment, I think people looking at oil markets, when you speak to the people we speak to, they're leaning towards the subject that Lisa is discussing, that perhaps they just don't have the spare capacity people hope is there.
Maybe the three of us can all get in the same studio for a fist bump on August 10th, John, because what Isaac said there about inflation folds right into the oil discussion, and that we're looking for a crude elevation, and what Dallas Tribune has done in the last month or so clearly indicates, as Isaac said, inflation is the topic.
The good news about headline CPI, as you know, Tom, energy's come down so much that we could get just a little bit of easing of things on a headline read year over year, considering the base effects.
I
get that.
Yeah, base effects.
I get that. We come down to the 8s away from the 9s. That seems to be the call. Though if we've done many times over the last months, we've said
what are we
peak
base affecting
inflation
on rent? What are we doing on rent?
Tom, it's going to be about month-over-month core, and that's what you've got to be looking for.
Yep.
And rent shelter costs seems pretty sticky to me and pretty sticky to others.
Way sticky.
It's going to be something that lives with us through the rest of this year, and that's a big reason why so many people think this Fed is going to go further, Tom.
Well, I get that we know they're going to go further, but it's the how much of it. I'm
with you. What did Larry Summers say about Chairman Powell? He was pretty blunt, wasn't he? How are we at neutral if inflation is where it is? at the moment.
I'm surprised David Weston didn't stop him in his tracks.
Indefensible, that's what he said.
Larry,
and we're getting that pushback
like that.
within the Fed as well, that certain people don't think we're there either. Futures are up, crude is too. We're up 1.8%.
New high.
There we go. This is Bloomberg. Futures positive here, up 0.6% on the S&P this Wednesday morning. Good morning, up 0.6 on the Nasdaq too. Yields are higher by 3 or 4 basis points again, 279. Just Fed speaker after Fed speaker at the moment, pushing back against whatever you thought Chairman Powell said last week. Yields keep creeping higher. Again, yesterday much more so by about 18 basis points on a 2-year. You will notice a big turnaround in crude, up 2% now on WTI to 96.29. Given the volatility we've had in this market over the last year, that's not a big move. I get all that. But Tom, OPEC Plus coming out with just a 100,000 barrel a day increase at a time when this president has been to see that Crown Prince and basically suggests we need more. That's not much more at all.
I'm going to go to a global price, Brent crude, John, and it just printed moments ago, 102. I want to make clear we have not seen a pullback in the bid. I mean, technically, the chart on an intraday basis out of Vienna is still up. And as I said, 102 is not 105. At 105, that is the level of embarrassment the White House will have to face.
How the White House responds to this, Tom, will be interesting. And we wait for that response now.
And it's compounded by this Pelosi trip and all the rest of it. We'll have to see. It's going to be eventful. A balance of power, I'm sure we'll touch those themes here today at 12 noon on radio. Television as well. Right now, we got 8 ways to go here with Kathleen Bostjancic, just so wonderful at Oxford Economics, is their chief U.S. economist. Kathy, let me set the groundwork for what Lisa and John want to talk about, which is just simply where are we on the guesstimate of Q3 GDP now that July has closed? Do you have any handle on it, or is it just too early?
Hi, John and Tom. Happy to be with you. Third quarter GDP is going to be quite important because we had the 2 negative prints for Q1 and Q2, so-called technical recession. We don't look for the large inventory drag that you had in Q2 and also to Q1 to some extent. So that's going to make things arithmetically look better, right? So we're looking for, roughly around 1.5% annualized real growth for Q3, but we don't have many hard data points, right, to really corroborate that. And particularly consumer spending is always at the heart of, GDP.
Well, then link that into oil. I mean, we were at 120 on Brent, 124, whatever it was. We come down, many guests talking about we'll get some real good news on oil. We've got the news this morning, and I get it's just OPEC Plus and that. How sensitive is consumer spending to oil in the modern day versus in the 70s when we were driving around VW Rabbit diesels?
The consumer is still very sensitive to energy prices, particularly gasoline. So oil obviously is going to be a big input to gasoline prices, but gasoline prices have really weighed heavily on consumer sentiment and confidence, and also consumers' pocketbooks. So the fact that gasoline prices are down 17% or so, that's big news. Still high, right? Still, well above $4 a gallon. But the fact that we're seeing the decline, that may lift spirits a little bit and help ease things a little for the consumer. But, just keep in mind what the Federal Reserve wants. And you mentioned the Fed officials still sounding very hawkish. They want things to slow down. They want the economy to slow down. They don't want it to crash. They don't want recession. But they do need things to slow down, enable for inflation to continue to go lower.
How much, Kathy, is the Federal Reserve inadvertently tracking oil prices? In other words, you were just talking about how people will have lifted spirits if gas prices come down. They might spend more. There might be a dip in some of the headline CPI figures. How much will the Fed use that to back away versus say you cannot count on this and it could change on a dime?
Well, that's a good point. And we see the volatility across many asset classes, including particularly oil, and things could change. But I think what they're going to be looking at is the fact that the headline number can influence inflation expectations. So whether it's market expectations, but more importantly, consumer and businesses, that's going to be important. And as long as gasoline prices continue to trend lower, that is really good news for all together, right, for all expectations and the actual prints. Core inflation is going to matter, though, too, right? The service prices, which we know have been rising, that's going to continue to still be an issue for the Federal Reserve, and they're not going to take their eye off the ball. Let's put it that way.
So today is either OPEC Plus Wednesday or ISM Services Wednesday, depending on what you think. Tomorrow is jobless claims. It's also the Bank of England. And on a Friday, it's the big jobs report. Which data, what type of data are you watching? And I keep asking different guests the same question because that has been the key question for the Federal Reserve. What data matters to determine their policy?
Well, every little bit matters because it's part of the jigsaw puzzle, the broader portrait of the macroeconomy. But I would say of this week, I would be looking towards the payroll number, just for the fact that many of us have been saying, we're in a technical recession, but not a true recession because the labor market is so strong. When the labor market is strong, it provides income, and that's the wherewithal for consumers to keep spending, even though they're getting hit by still high prices. If you start to see cracks in the labor market, that becomes a very different story.
Kathy, you and I have been through thick and thin on this. And right now, as I was kidding John Ferro, I'm drowning in gloom. I mean, the level of gloom out there, worry, the hand-wringing, it's, is it 07? Is it 09, collapse of the great financial crisis? No. How bad is it out there, Kathy? Help me.
Well, it in our opinion, is not anything near the great financial crisis or the COVID recession that we just went through. At worst, it would be, a moderate recession, in our opinion. But we think if we do fall into recession, it could be quite shallow. We're not in the camp that thinks that unemployment rate needs to go sharply higher to bring inflation down. We're already seeing goods inflation trending lower. And we think eventually, right, rental prices will come down because home prices.
Sam Stovall of CFRA was just on modeling 9 down to 7% or something like that. Do you detect a pause on the way down, or is there an inertial force to it that really gets us back towards the vaunted 2% that the Fed speakers talk of?
Well, we have a similar forecast, actually, for this year. We think 9%, we're kind of trending around 9%, maybe 8.8 for the next few months. By year end, somewhere around 7%. Wow. But the year-on-year comparisons get much easier next year. And that's the key. And you don't need outright price declines, right? The levels don't have to decline. Just the month-to-month change has to slow. And we need to see service price inflation start to cool. But again, you don't need outright declines in price levels. And I think that's important to keep in mind.
Kathy, how much does the policy mix in Washington, D.C. change the picture at all for you, whether it's the policy internationally with China or some of the domestic bills that you're seeing proposed?
Yeah, right now the size of the Build Back Mansion bill is rather small, right, compared to what we've just gone through in terms of fiscal policy, and it's over a 10-year period, so it incrementally could be positive for the economy, we believe, overall, especially if it starts to boost innovation and technology, but not a big game changer for us. I mean, it's just. Right now, there's not a reason for fiscal policy to pick up a lot and boost the economy because we want to see things cool down. In terms of geopolitical, that is always a bit of a wild card, right? We didn't really know what was going to happen with Russia and Ukraine. We don't really know what's going to play out with China and Taiwan. A lot of brinkmanship, and I think that makes us nervous, makes the markets nervous. And we'll have to see how that plays out. But that's always a wild card for us.
Kathy, can I get to the academic debate of the moment in economics? And it has implications for financial markets. It's being led at the moment by Olivier Blanchard over at the Peterson Institute. And the question I'll ask is the question they ask. It's, do declines in vacancies involve less increases in unemployment when the initial vacancy rate is this high? Kathy, have you spent some time looking at that? Because that seems to be the debate from Blanchard et al. Going against, say, Governor Waller over at the Fed.
Yeah, I mean, traditionally, when the vacancy rates decline, you do see a large increase in the unemployment rate. But we think this time is quite different. There is, even though the economy is slowing down, we still have a really tight labor market, and there's still more jobs out there than workers. So I think it is possible to cool the labor market and cool the economy without seeing a real large increase in unemployment rate. We may get some, right? But we're talking, are we going to go to, 2%, 3%, 4% higher? We don't think that's necessary to bring inflation down. We think there is a way to kind of thread that needle, even if we have a bit of a mild recession.
Kathy, awesome to catch up with you, as always. Kathy Voss-Jancis there of Oxford Economics. Tom, that is the soft landing, hard landing debate of the moment.
Well, and it goes to the demographics, and this goes back to Meltzer. And, my huge respect for Professor Blanchard. But, John, is it a homogenous America, or is it two-part with a wide body of people that are just flat out lesser employed or unemployable? And if you do that, you get a Voss-Jancis outcome, which is, unemployment goes up, but, does it go up to fearful levels? There's a school of thought saying no.
Larry Summers is fired up about that one, Bramo, with Governor Waller on the other side of it, of course.
Basically saying that you're underestimating the tightness in the labor market. Behind this disagreement is a real misunderstanding or a lack of understanding of why the participation rate is as low as it is. And we heard a number of different academics try to understand how much the labor market has shifted post-pandemic, post-COVID. And really the reasons why are unclear. And until you get that participation rate up or understand that it's going to stay here, that's going to remain an uncertainty in terms of tightness.
This conversation is not academic. In the last hour, OPEC Plus agreed on a very small increase in September oil production of just 100,000 barrels a day. About an hour ago, Julian Lee put out this comment, and we shared it with you. If you missed it, I'll share it with you again. He said a 100,000 barrel a day increase shared pro rata among the OPEC Plus members would raise Saudi output by 26,000 barrels a day. The Saudi target for output by that much, that's not even enough to fill one Suezmax tanker a month. I mean, come on. How DC responds to this is going to be fascinating. I'll bring you the headlines in the next hour if we get some with Anne-Marie. I'm going to be catching up with Eric Knudsen of Neuberger Berman as well, alongside Michael Purvis of Toolback and Capital, and Laurie Calvasina of RBC around the open in Ballast to why maybe we haven't seen the lows of the year yet. Laurie's got a lot to say on that around the open. That does it for me on this show, Tom. I'll be on Bloomberg TV in the next hour.
Oh, another property.
We take the reins into Bloomberg Radio at 9 o'clock. Tom Keene, Lisa Abramowicz and Jonathan Ferro. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Nancy Pelosi has reaffirmed the U.S. commitment to Taiwan. The House Speaker ended her visit there today after pledging the U.S. would not abandon its commitment to the democratically elected government. China reacted to Pelosi's trip by announcing a series of military exercises. Beijing also imposed trade sanctions on Taiwan. In Turkey, inflation was almost 80% in July, and it may be months away from peaking. Turkey's central bank is sticking with its ultra-loose monetary course. The rise in consumer prices has already forced economists to rewrite forecasts multiple times this year. And water levels on Europe's Rhine River are getting closer to the point where it would have to effectively close. That would put the transport of large quantities of goods at risk. Coal shipments are already restricted by low water levels. That makes coal more expensive, which raises the price of operating coal-fired power plants. And Facebook parent Meta Platforms is considering its first ever bond sale. Bloomberg's learned that Morgan Stanley, JP Morgan, Bank of America Securities and Barclays will arrange a series of fixed income investor calls today. That may lead to a Meta senior unsecured debt offering. S&P has assigned Meta a AA- rating. Moderna posted second quarter results that were stronger than expected. The drug maker says it will buy back $3 billion in stock. Plus, it reiterated its expected COVID vaccine sales for the year. Moderna is hoping to expand the reach of its shots. In June, U.S. regulators cleared its vaccine for children under 6 years old. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think that the big issue we have in the market is that the Fed is not about to pivot. The market is kind of looking through what the Fed and other central banks are saying right now and saying, okay, they will have to pivot. So it's kind of this tension between what they're actually saying and the market trying to think just one step ahead of that.
Early this morning, we pivoted with Jens Nordvig of Exante Data there, of course, on dollar and some dollar dynamics, but of course on price change, which is affecting all of us. Lisa Abramowicz and Tom Keene. And right now, the honor of the laureate from Columbia University, Joseph Stiglitz, joins us. And on any number of the topics we could talk about, we go to something dear to his heart, is a gentleman from Gary, Indiana, long ago, knew different bouts of inflation fear and inflation scare. Joe Stiglitz, your basic message is, would everyone calm down? Why is this inflation not like the inflation of Heller's 70s?
Well, first of all, it's mostly a supply side inflation. And think about some of the things that are really driving it. Take the price of energy, the price of oil. It's way up. We have a war in Ukraine. We understand that. But we know over the long run, and when I'm talking about the long run, it's not that long, the price of oil, energy, is going to come down because the backstop, as we call it, we know we can produce an unlimited amount of renewable energy at the equivalent of about $30, $40, $50 a barrel. And that number keeps coming down. So that is the number that energy is going to be at. So we're going to be disinflation. We're going to go through disinflation in the future. Well, I can't tell you when it's going to happen.
Right. Oh, fair. Okay. You know, what's so important here, Joe, and if people even redux back to 1947 out to the Eisenhower disinflation and the two bouts of disinflation we had into the early 1950s. Once inflation begins to disinflate, do you believe it keeps going, or do we come down and stay at a certain point, which causes an uproar? Is there a momentum to a disinflation?
Well, people used to think that there was a momentum on inflation and then a momentum on disinflation. But the forces for that momentum are much, much weaker today than they were, say, 50 years ago. 50 years ago, unions were strong. When prices went up, they demanded higher wages. The higher wages led to higher prices. Unions are weak. And so we're back to, you might call, normal competitive forces. And what we saw in the years before the pandemic, that overall supply was extraordinarily robust and prices were kept down. And I think we're going to be returning to that kind of a world.
Well, what's the Fed's role in this then? Because there is this belief out there that this is a different moment, and people point to not just oil prices and commodity prices, but also this fissure between the U.S. and China and a reshoring of some of the supplies, which is naturally inflationary. Also, some of the conflicts inflationary by nature with Russia and Ukraine. How much are you looking at a Fed that, even if they don't want to, has to raise rates substantially to get ahead of inflation that may disinflate down the line, but not quickly enough to create some real threats to this economy?
Well, first of all, almost all those forces you cite are either long-term or relatively small. Yeah, we're going to be reshoring. We have low-cost suppliers that are alternative to China. Vietnam and Asia, Latin America has a lot of capacity. So yes, costs are going to go up, and there's going to be a readjustment. But it's going to take over a number of years, and it's not going to be that big. We ought to get prepared for it. What I worry is on the other side, that the Fed works too fast and too much. Remember, it takes about 18 months for the full effects of monetary policy to be felt. And in that span of 18 months, if the war in Russia comes to an end, the energy prices will come down, and that will be a strong disinflationary force. Food prices will come down. There are already signs of that. And that will be a strong disinflationary force. You remember, over the last 50 years, public policy has been telling farmers, don't produce.
Yeah.
Don't make so much food. And if we just reverse that policy, prices of agricultural goods are going to come down.
Yeah.
So again, we have a backstop here that it's hard for me to believe that we'll sit by and simply let prices be so high while we continue to subsidize our farmers. We're going to tell our farmers.
Joe, it seems like you think that the potential error is worse by the Fed going too fast rather than too slowly, which is the opposite of what a lot of people are saying, including some Fed members. What would you have to see to change your mind in terms of the data, in terms of the incoming developments on the ground in the economy?
Well, I would be looking for a particular acceleration of inflation. Right now, wages are not keeping up with prices. Really the opposite of what you would expect in a very tight labor market. So if I saw real wages going up dramatically and I saw inflation start to take off at a higher rate, rather now the rate of inflation is dampening. It's still going up, but it's at much lower rate. Those are signs that would lead me to take stronger action.
Professor, we're going to stay with you on Bloomberg Radio. I look forward to speaking to you here in a number of minutes with Paul Sweeney. Joseph Stiglitz, the laureate of Columbia. Lisa, it's unambiguous. Oil now breaking up. We really have not seen any erosion to the bid coming off the OPEC announcement. Is it a big deal? I'm going to say no, but I'm sorry. It is headline making and it is becoming tangible here. Brent crude, Lisa, 102.33. 102 is not the 101 of 90 minutes ago.
And there's a question of why, and this comes on the heels of OPEC Plus saying that they're going to increase output by a mere 100,000 barrels, given that this is the lowest increase in history, and it comes after a plea from President Biden. How much does this indicate a lack of ability to produce more by Saudi Arabia and other OPEC Plus members? How much does this indicate a disbelief that the demand will be there? In other words, a softening in the backdrop. And that, I think, is key in understanding the price dynamic here, Tom, considering that is the push-pull of this market right now.
To me, it's the calendar, and there's a tradition here on the midterms once the primaries get squared away, and I know Ms. Cheney of Wyoming has an important primary coming up, I think, in, 2 weeks, Lisa? Maybe exactly 2 weeks from now. But all of a sudden, it's September, and all of a sudden, a gallon of gas matters.
Well, and it's been mattering, and it's been mattering to the benefit, given the fact that it's come down steadily. But at what point does that reverse? Or if it stabilizes, how does that factor into things?
Yields across the curve higher right now by a solid 7 basis points in the 2-year yield. The 10-year bond, 2.80%, with continued new curve inversion down to a negative 33 basis points. Futures, a nice lift to equities off the challenges of yesterday. Futures up 29. Please stay with us. An interesting day. This is Bloomberg.